Tesla earnings stream. I have something to show you all, and the market is not closed yet for another 30 minutes. I want to show you something, and I want to see how this metric is going to play out. I've never used this metric before in an earnings call or earnings release, though it might make sense to use depending on how revenues are divided over at Tesla. And I found this very interesting. I was studying this yesterday, and we know there could be some risks with this, but I want to show you this anyway. We touched on this in the course member live stream this morning. Pay close attention to this right over here. All right, see this figure right here? This is a simple math equation. What we did is we took total revenue. You'll have to multiply that by 1,000 to get billions. I simplified it a little bit. So you take total revenue. So that's going to be solar, energy, cars, FSD, everything, right? And so what we're trying to do is try to figure out how much money does Tesla make per vehicle that they deliver with the entire ecosystem. Insurance, solar panels, semi-truck, whatever, doesn't matter. We realize that that's not going to be perfect because obviously, energy could go up and vehicle deliveries could go down, and that's going to skew things. But we don't actually think it's that terribly off of an indicator. So now this is very interesting because if we divide the total revenue of Q2 22 by total deliveries, we'll get $60,000 per car. The next quarter, Q1 2023, we could see that revenue per car go down to $55,000. Then in Q2, we see it go down to $53,400. Then in Q3, we see it stabilize at Q3 or at 53,000. Sorry, I'm in the way there. Let me just hide that. And then in Q4, the number goes down to 51.9. Now, this is really interesting because Wall Street has estimates in terms of what revenues are going to be for Q2. These numbers that Wall Street has, we can divide that estimate by the number of deliveries we already know Tesla has had, 387,000. So I want to ask you to think about this so you could see the impact, okay? If we look at this trend, watch the trend, okay? The trend goes 60,000, 55,000, 53,000, 53,000, 52,000. Do you get the trend? What direction we're going? What number do you think would be next? Well, probably 52, 51, maybe it ticks up a little, but we don't have a trend of it really ticking up with the exception of over here, like 20 basis points. So somewhere around 51, 52, you would expect, right? But watch what actually happens. The number for Q1 based on Wall Street's estimates goes up to 57.66. Now that could mean one of two things. That could mean the amount of revenue that Tesla earned from all other sources grew while deliveries shrunk, or it means Wall Street estimates are way too high. So then what I decided to do is look at Troy. I looked at Troy's estimate for these Tesla figures and what he thinks revenue was going to come in at. And when I look at Troy's number, watch what happens in that corner right there. Go from 57.6, then use Troy's numbers to 53.6. So I actually think there is a chance Wall Street numbers on Tesla could be way too high. This right here is Wall Street, and this right here is Troy. And unfortunately, I think Troy is probably going to be more accurate than Wall Street, which means the revenue numbers are likely to miss. That's my take going into this. Now, I'll be transparent. I have no trades going other than a spread. I've got a put and I've got a call. So it doesn't matter which way we're going. I'm just betting that the move is probably going to be larger than what we expect, though it might be very nominal. There have been cases where Tesla's moved very little after earnings. This is a very pivotal earnings call. And so Elon could come out and say something like, hey, robotaxis are ready. Be prepared to have your mind blown August 8th. This stock is going to double. So I have a call. Or Elon says, F J Powell and the Fed, the economy sucks. We're not giving any guidance on deliveries, and we're probably going negative free cash flow, and we might have to raise money. But it could literally go any direction here. And that's what makes this very interesting. I actually tweeted, you should follow me on X if you don't yet already. But I tweeted this, and you should let this sink in, okay? Let this sink in, I always like to say. Elon said it first, okay? So what we've got here is this is the last Tesla earnings call before Elon Musk's pay package vote. Now that's really interesting. That means the pressure is on for Elon to potentially try to really showcase like, hey, I'm here, I'm working, trust me, bro. We'll see what happens. But again, I do think that, oh, did I put Q2 in the thumbnail? Sorry, this is supposed to be, we're in Q2 right now, but we're actually going to be getting Q1 earnings. Duh, we just got their 10K. I'll update the title really quick. Thank you so much. But anyway, okay, so the thumbnail. What's really interesting is this is going to be a big day, mostly because I was asked yesterday, I was in a Tesla chat on this yesterday, and I was asked, hey, Kevin, do you think there's been a more sort of momentous or important earnings call or earnings report than this one? And of course, we could argue that, sure, maybe the earnings report of, the era during production hell was more important. We could make the argument of that. But I think there's actually a real possibility that the better argument is that this is more important because we're really trying to project the future growth of this company to see, look, how do we underwrite this company? If we underwrite this company with, 40% growth versus 20% growth, it makes a phenomenal difference to the valuation that we could put on this company. Obviously, it's a twofold difference. So it's very, very important we try to get, or we get some kind of guidance. Now, this is one of the risk factors as well, is that potentially we get an Elon that says, hey, we might not actually have, as we say, how do I change the title on X? I don't think I can. Ooh, that sucks. Okay, I might have to redo the X stream. Come rejoin me if you don't mind on X. I'm just gonna close it and reopen it really quick. And yeah, just come right back. That'll be the easiest. X doesn't let you change the title, apparently. They should let you change the title. I'll look one more time really quick because I have faith that Elon has a way to change the title. But if there's not, then I don't know how to do it. And I am, in fairness, I'm doing it through StreamYard, so maybe you should be able to change it there, but it doesn't let you. See, I change it and then it doesn't update. Stream is live, I can't change it. Okay, no problem. We're gonna remove it on X. Just come right back. It'll come right back. One sec, delete on X. Okay, there we go. Now we're gonna redo X, just to get that title right. And we're back. Okay, so what we were just covering, if you were, or if you're just now joining, I want to go through why I think there is a chance that the Tesla Q1 numbers are actually going to be hot. And again, if you're just now joining, I think this is a really big deal and we should be paying attention to it. Now, the stock today, well, let's take a look at the stock performance first today, because the stock today is performing a nice bounce. Good bounce going into earnings here. I will say there were some pretty decent trades you could have made on the day with just one very simple level. So I'll show that to you here. We traded this morning this triple bounce right here in the stocks and psych group. We traded this triple bounce right here. We had a breakdown, bounce off VWAP, bounce, bounce. You could have played that trade over and over and over again until basically now into the close, which it makes sense. The last hour, usually the lines go wonk because you either get institutional buying or selling. So you gotta be careful in that last hour. The last hour is usually a really dangerous time. You're either gonna make it big or you're gonna lose it big. So I don't love the last hour of trading. But a lot of my focus today was what is Tesla trading like intraday, and that was right around that 145 level. I did get some folks who mentioned, hey, I ended up making a trade on that Donald Trump 35 level. That 35 level was a big one today. As soon as Donald Trump's stock lost that $35 level, Whoopsie doopsie. That got, we lost what, $3 there or whatever. So I know some people made some money on that, so that's great. But anyway, let's go back to analyzing, for those of you just now joining, why I think there is a chance that Tesla's revenue numbers forecast by Wall Street are way too high. I'm going to get the latest numbers really quickly as well, so we could compare to those. And we'll also get the historic volatility again. Let's update that again, which will also get, we'll be able to look at some implied figures. Let's see what the implied is for earnings. Earnings are always generally a day you get higher expected volatility and then usually lower after. I actually think it's going to be the opposite this time. And the reason for that is the implied one-day move for Tesla stock is 8.28%. That's here. Well, historically on earnings, the average movement after earnings is 8.94. So we actually have less volatility now going into earnings than we have previously. So over the last, it looks like over the last few hours, as Tesla started going up after those PMIs, volatility did start converging with the historic averages. Yesterday, volatility was pretty low for Tesla, so it might have been a cheaper time to buy options on Tesla yesterday, but you would have had another day of theta decay. I don't think it really makes a big difference, though, whether you're, if you're buying at a historic volatility of 22 or 40, mostly because I think there's a chance that the volatility could go up to 120. So we'll see. Now, usually when you go up to really high historic volatility, like we did on January 25th, was that the last earnings call? Oh, that would be really interesting if that was the last earnings period. Let's go out here. It usually doesn't last that long. So, yeah, here we go. Yep, look at that. January 24th. So listen to this. January 24th, going into earnings, you had volatility at 13.5. That's how freaking low you had volatility. And volatility went from 13.5 all the way up to 99 the next day, 104 the day after that, 119 the day after that, and 120 the day after that, and then volatility collapsed back down to 40. So you could potentially have 3 to 4 days of some serious volatility after these earnings. The earnings before that were October 18th. I'm going to zoom out to October 18th. October 18th was a little less volatile. So October 18th was here, although it was also painful for the stock, though you did recover after that October 18th. October 18th, we saw volatility go from 30, the day before earnings, or the day of earnings, basically, to the next trading day, we were up at 45 to 81, and we peaked out at 84. So usually Tesla earnings especially give us some extra dose of volatility. So that does make for some interesting potential opportunities. But again, we are expecting already, markets are pricing in an 8% movement to either direction on the stock. So if you're making options bets, you're really betting that Tesla's going to move more than 8% in the time frame of the option that you're making a bet on. So I did send a trade alert on this with both a put and a call to course members. You could see my strategy on it and my description on it in the Stocks Insight group. As always, I'm not guaranteeing, you're going to be able to buy or sell at the right time or it's the right move at all. These are just trade ideas that I like to send out. And I just try to give my rationale on it. And then what you do with it is ultimately up to you. So let's go back for a moment to that data that I think is so fascinating on Tesla, and that's right here. It's the Tesla Q1 numbers. We talked about this already, but I think it's very important, and you don't want to understate how important this is. Right here, you see, and we've already explained this, so I don't want to rehash this too much, but all I did was divide the total revenue of every source Tesla has by the number of vehicle deliveries, and there's going to be skew there. So if we have a lot more energy deliveries and fewer vehicle deliveries, the total per car is obviously going to go up. So you're going to have some skew there in terms of the number. But take a look at this, because cars do represent the vast majority of Tesla's revenue. As you go from Q4 22 to Q1, 2, 3, otherwise, the total revenue per car goes down. This makes sense. There were also price decreases. 60K, 55K, 53K, 53K again. And then we get all the way over here to 51.9. The scary thing is Wall Street's estimates today, which I'm going to read off Wall Street's consensus bets right now just to give you that estimate. But the scary thing is Wall Street's estimates should indicate a continuation of this trend, but they don't. They break that trend. So if you go over to Wall Street's consensus estimate, you actually get a number that's at 57.6, which is oddly high. So I think there's a chance Tesla's going to miss on this revenue number. Now, I could be entirely wrong, but historically, Tesla misses 50% of the time. I think they're going to miss this time. And they also miss 5 out of 8 times on adjusted EPS, and they only beat net income 5 out of 8 times. So they don't have the best forecasting for Wall Street. But that's okay. It's an earlier growth company. And again, if I look at Troy here, you'll actually get a read of about 53.6 with Troy's revenue number, which you'll see Troy's revenue number is actually substantially lower than Wall Street's. In fact, if we go ahead and divide them into each other, Troy is 7% lower than Wall Street. So you could potentially have a 7% miss if you matched up with Troy's estimates. And I'm a big fan of him. He's a very data-dependent guy. A lot of people get pissed off at him because currently the data for Tesla isn't fantastic. But I actually think he's a great person. He's logical. He doesn't like sort of being very public-facing. He's a very private person. And I'm just a big fan, so I have to give him a shout-out. You could sign up to his Patreon. Just look for his Twitter. It's Troy Teslike. Anyway, so take a look at this. Let's go through some of these say.com questions and some of his projected answers. So question 1 out of 10 is the hardware for Optimus robot is 20% ready and the software is 5% ready. Okay, the question here is, what's the current status of Optimus, right? And so Troy estimates that Optimus is only about 20% ready robot-wise. I actually think that's way too generous, and the software is 5% ready. I think both of those numbers are really generous. However, I actually agree with his time frame. The 6 to 9 years, software 5 to 10, totally agree. Okay, question number 2. What is the status of the 4680 production? 4680 cell production at Giga Texas was operating at 6% capacity on March 20th, 2024, when Tesla tweeted that they produced enough 4680 cells for 1,000 Cybertrucks per week. It took Tesla 3 years and 3 months to get to 6% capacity. The plan was to get to 100% in 1 year. And we can read a little bit more of what he says, but for now, let's, actually, I'll just expand it. I just don't want to lose my place in it. There we go. And this just shows his math. So we're at about a 6% capacity. Okay, very well. Then we have, what is Tesla's current assessment of the pathway towards regulatory approval for unsupervised full self-driving in the United States? And how should we think about the appropriate safety threshold compared to human drivers? Right, well, this is where I could imagine Elon's going to say something like, human drivers suck. And he's not incorrect. I agree. I don't think, I don't profess to be the best driver. I try never to drive. I ask other people to drive. Tesla has never conducted any driverless full self-driving test. Well, I mean, legally. Such a vehicle would probably require additional hardware. I agree with that. Now, Omar does not agree with that, but I actually agree with that. And there would likely be countless unforeseen issues when they begin testing. As a result, it would probably take 5 to 10 years before they can offer driverless rides to the public. Okay, 4 out of 10. The compact car, can we get an official announcement and timeline of the 25K car? So obviously, as usual, we're going to hear them say something like, hey, this is not the place for product announcements. And we are going to do bingo in just a moment. Yep. Compact cars production is delayed due to the lack of batteries, blah, blah, blah. That's an estimate. So I'm going to go a little faster on these. Can we get an official announcement on the timeline on the 25K car? No. Following the robotaxi unveil, what's a realistic timeline for launching a revenue-generating robotaxi network? 6 to 10 years. 5 probably, 10 definitely. What's the progress on the Cybertruck ramp? 700 per week at the end of March based on VIN data. At full capacity, we will reach 5,000 a week. That means production was running at, I think that's 14% capacity. It costs Tesla $29,000 to produce a Model 3 standard range in China. The compact car would most likely cost $24,000 to produce. This is the Tesla wants to start production in the U.S. instead because of the credit, blah, blah, right. Okay, got it. Can we make the SFD transfer permanent? Yes, this is actually a good idea. Yeah, I agree with that. And then, let's see, what is this? What's the timeline for the Semi? Tesla unveiled the Semi in December of 17, and it's been more than 6 years since then. Currently, there are two main problems with the Semis: no dedicated factory, and there are a lack of batteries. Okay, so that gives us a little bit of insight into what Troy is thinking. Now, we are going to do some bingo here. Tesla is selling down a little bit into the close. This is not highly unanticipated, especially since this is expected to be such an important earnings call. So we are dropping below that volume-weighted average price right now. And when we do jump into the Qs, also known as the VWAP, we jump into the Qs, we could see that same sort of topping that we saw about an hour ago, and we saw a little bit of a decline over here. Now, what we're going to do now is we're going to play some Tesla bingo. And for this, we really want to estimate that what we put on here would be somewhat realistic, although you just never know what you're going to get. I think I'm going to start with the first one, and what we're going to do is we're going to put Elon in the middle, and we're going to say that, wait, how many lines? Oh, it's I didn't draw enough lines. Hold on one sec. We're going to put Elon is on the call in the middle, because it would be pretty crazy to try to be pitching for an, what's it called, compensation package and then not show up to your own earnings call. So we're going to go ahead and give us a freebie here. Elon shows up, okay? That, I think, is a given at this point. I think he's only missed like 1 or 2 earnings calls anyway, since he said he might not be at all of them. All right, then we're going to put in some other things here. Not the time for product announcements. I do think that there's going to be, I'm going to go through my guesses first, and then we're going to go to the audience here, so just hold on one sec. Then what we're going to do is we're going to go for something about rates are too high, Fed pain, something about that. Then we'll do something about, we're gonna get no guidance. I'm gonna write that down. So we're gonna get no deliveries guidance. No deliveries guidance. Okay, then I'm gonna go under 500 mil free cash flow. Then we're gonna go between 15 to 16% margin. We'll see. Now I do think that they will say that the layoffs will help margin. So I'm going to go throw that in here. We're going to go layoffs will help margin. And then let's see here. We usually get some talk about sort of technology, future announcements. Oh, for the 25K car, I think he's going to punt answers on this. And it would instead be sort of like a all in on Robotaxi, set cal 488, right? So we'll see something like that. That would be my expectation. Okay, building Giga Mexico. Yeah, I like that idea. I'm gonna go ahead and say Giga Mexico. He'll probably say something like delayed until we perfect the ramp in Austin first, right? That would be the next generation vehicle ramp. Let's see here. He says FU again. You know, he's never said that on earnings. Well, no, actually, he's yelled at analysts before. I don't know. That's interesting. Sales decline. Well, that's for sure. Elon emotional. Okay, I like that one. Okay, so that one's going to be subjective. Elon emotional. Emotional damage. What about labor? Maybe something about, I don't know. I want to say anything about something about the layoffs. Layoffs sad but necessary is probably what I'd be saying if I were him, right? So like if I were Elon, what would I say? That's why I would do this. First of all, I'd like to hear him say, and I would probably say, advertising not dead, just recalibrating, right? So like, hey, we'll advertise, we're just gonna do a better job. That's what I would say if I were Elon. I would definitely say that the 25K car is not canceled, but we are going all in on Robotaxi, and I would clarify that those two could stand independent, but I don't think he's going to do this. So I think what he'll do is he'll end up combining the 25K car talk with Robotaxi, not to be confused with retweet. Rates are too high, Fed pain. I think that's actually fair and probably healthy for him to talk about because Jerome Powell sees these headlines. So if Elon bitches about Powell will see it, like I think Elon should really go deep into that story, right? Like we had to lay off people because of Jerome Powell. That's what I would do if I were Elon. We had to fire people because of Jerome Powell. Dude, that'd be so good. But anyway, layoffs will help margin. Not that we wanted layoffs, right? Not the time for product announcements. That's obvious. We do expect him to show up. Giga Mexico being delayed. I do think we'll get some kind of sabotage talk in Berlin. So there'll be something about the saboteur. Dude, I can't spell that. Attack in Berlin. I'll just do that. Whatever. Okay, let's see. Oh, Tesla having sold Bitcoin. That would be interesting to prop they could prop revenue in there. Tesla sold some Bitcoin. Okay, maybe not all of it, but some of it. Prop up that cash. Not a bad idea. Something about eco-terrorism, cocaine. India. Yeah, a mention of India. Mention India. That's a good one. We've got, let's see here. Let's see here. Selling Bitcoin. Yep. Mentions price after gas deductions. Yeah. Cybertruck recall. Optimus. Production hell. Oh, yeah. Like dug our own grave with, again, right? Dug grave on CT again. Production hell again, right? Sort of like he's putting himself through that. Oh, obviously AI need more chips, so CapEx. And I've got a few spots left here. China competition. Chinese very smart, competition strong in China. I would expect him to say something like that. And high-level VPs or resignations, not layoffs. Yeah. Let's see here. How many people are getting free trial? Tesla turning, yeah, exactly, the warn notices. Obviously some FSD free trial talk. I think that's probably a little bit of a freebie there. Dojo Optimism would be nice, right? But I'm actually going to write Dojo Pessimism because he's been pessimistic before, so I'm sticking with that. I got 4 left, and we got 2 minutes left here. Advertising we wrote down. Uber partnership, that's interesting. Maybe that 25K car, low margin. That's interesting. Okay, balls to the wall. No crystal ball. Ooh, that's a good one. I'm gonna write that down. No crystal ball. You should buy one on Amazon. They're not that expensive. So, oh well. Then we got rates, recall. Okay, let's go ahead and see how the market's moving. I'll think of a couple other things here in just a moment. And then we are going to get into the close here. So let's get ready for that bell. This is going to be really fun. No matter what happens, remember, folks, a few things actually. Number one, I am going to be starting the road show today for House Hack, hence why I'm dressed up. Imagine that. We are going to be meeting potential investors. You're welcome to come. Go to househack.com/2024. househack.com/2024, and you could still RSVP if you wanted to. Our first 2 events are tonight. I leave here and I go there. Okay, so stay tuned for that. Courses on building your wealth. The next expiration is on April 30th. Email us at staff@mekevin.com if you have questions. And with that said, folks, I love y'all. I wish y'all the best. This is it. This is the beginning of earnings season. So let's get ready for that bell. Oh God, CNB sizzle. What the hell? Hold on. Hold it.
5,067, still settling, of course, but all gears towards Tesla now in overtime. And Visa, of course. I'll see you on the other side into OT.
You know, every time I say hold it, what does that remind you of? When there's somebody who goes, hold it, and then it goes, no, engage the reversing engines. Does anybody remember what that's from? All right, we'll see if y'all remember what that's from. All right, we are now waiting for these numbers to come out, and Tesla docs, we are waiting. It's not Hodor, not Game of Thrones. Oh, man. I think you got a lot of people who are a little nervous about this one, and honestly, I don't blame it. This is gonna be intense. So we're waiting for, it's the Titanic. Good job, folks. Yeah, plenty of you guys got it. What's that? The guy in the engine room. Hold it. No, engage the reversing engine. This is great. I love that scene. That goes through my head every time I'm trading. Like earlier this morning, I'm looking at the bounces here. I'm like, hold it. It's so bad. It's like so addicting. Anyway, all right. This is it. We are now 3.5 minutes away. The stress levels are max. If you don't yet have life insurance, you can get that in as little as 5 minutes by going to metkevin.com/life. Paid promotion, just like StreamYard is. They let me stream on X, Twitch, and YouTube all at the same time. Texas Instruments, here we go, comes out with a beat. CapEx of 125, a little greater than expected. Revenue comes in at 366 billion versus the 36 billion. Operating profit comes in at 1.29 versus the 1.12 expected. So good job, Texas Instruments. Texas Instruments on the beat. Let's go ahead and see how TXN is moving. Texas Instruments only up 2.9% after that beat. Looks like a little tenuous there as we wait for those Tesla numbers and the rest of the market. Dun, dun, dun. Okay. Next thing we need is Who Wants to Be a Millionaire music. So no earnings yet. I'm seeing some obviously fluctuations here on the sticks, but no earnings just yet. We are waiting. Let's go ahead and do a sound test here. I am not going to play that to you for 3 minutes. Okay, good. Oh, man. This is going to be nuts. So, it's exciting. Somebody says my mic is redlining a little. Okay, I'll drop the volume a little bit. Hopefully that's not too quiet. Let me know if I ended up making that a little too quiet there. Okay, I don't have Tesla numbers yet, but I'm seeing like a big move there on Tesla numbers. That is, pretty aggressive candlestick there. No sheets yet. The thing's up like 4% right now. Okay, Tesla. Okay, adjusted EPS miss on adjusted EPS, 45 cents versus 52. I'm still don't have numbers here. Come on, man. What's going on? Waiting for it. Here we go. Tesla still sees notably lower volume growth for 2024. Updated our future vehicle lineup. Okay, I'm waiting for some more information here. So it's a miss on adjusted EPS. The stock's moving up like 3% here. So we're moving between these two lines right here. Okay, revenue comes in as a miss. We expected a miss. We got a miss. We got a 21.3. But they're talking about new vehicles, including more affordable models, to accelerate the launch of new models. There it is. That's what we wanted to hear. That's exactly what we wanted to hear. Accelerating the launch of more affordable models. That's exactly what you want. That is good. That is very, very good. That's literally what people have wanted to hear from Tesla. It wasn't that hard. So Tesla definitely moving on this news now. This is great news for Tesla. This is what you want. Okay, we experienced numerous challenges in Q1, from the Red Sea conflict and the arson attack at Giga Berlin to the gradual ramp up of the Model 3 in Fremont. Excluding the Cybertruck and unscheduled downtime, our COGS per unit declined significantly. That's great. This is fantastic. Cost of goods sold declined. Let's see what the margin is. Margin. Wow, look at that margin. That's with credits. Margin coming in at 17.4. Cost of production going down. Really, really good here. Great news. That's fantastic. You've actually got operating cash flow. There it is. Look how low that is. Under $500 million. Not good. So not good on the cash flow number. So cash flow of negative $2.5 billion in Q1. Wait a sec. Operating cash flow was 0.2. Free cash flow was actually negative. Holy smokes. That's not a great number. I don't like to see that. I like hearing this talk about new affordable vehicles, and I like margin going up. I don't like seeing this negative CapEx, but then again, investing in AI, I get it, okay? 2.2 billion decrease in our cash to 26.9 billion of cash available. Now keep in mind, when they have this cash available, they also have bills to pay. Increased AI training compute of more than 130% in Q1. Record energy storage deployment of 4.1 gigawatt hours in Q1. Produced over 1,000 Cybertrucks in a single week in April. That's fantastic. That's a great metric right there. I like to hear that. So that's quite a good move up there on Cybertruck production. Looks like by Troy's calcs, we were somewhere around 700 a little earlier. Global EV sales continue to be under pressure as many car makers prioritize hybrids. It's not the future. While positive for our regulatory credits, we prefer the industry to continue to push EV adoption. Right, because we might have an increased margin there because of those EV credits, right? So we'll want to pay attention to that. Quick note here, Visa beat on net revenue, 8.78 billion. EPS Q2, 2.29 versus 2.03 year over year. Enphase Energy misses, and the forecast misses. 263.3 million on Q1 revenues versus the 278 expected. Q2 forecast coming at only 310 million versus the 349 expected. No recovery yet. Tesla does continue to be focused on company-wide cost reductions. While many are pulling back on their investments, we are focusing on future growth. This is smart. This is a really good right here. Not only is the future electric, but it's autonomous. We believe scaled autonomy is only possible with data from millions of vehicles. To make FSD supervised more accessible, we reduce the price. Good. I mean, where's the part about more affordable models? Let's see if we could jump to that. Here we go. Okay. Look at this product. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in 2025. These new vehicles, including more affordable models, will utilize aspects of the next generation platform as well as aspects of the current platforms, and we will be able to produce on the same manufacturing line as the current lineup. Now that's really interesting. Because what they're really arguing here is they're not going to go to the full next generation lineup, right? So let's document that here. So basically, not going to go 100% next generation production line. However, it sounds like they're going to go for a hybrid approach of pieces of next gen and current gen. That's actually smart. I like that. This update may result in achieving less cost reduction than previously anticipated. Aha, there it is. Okay, so not going to save as much money as we thought because they're not going to go fully to the next gen line, but it enables them to grow vehicle volumes. Thank the Lord. That's what we need. You want vehicle like volumes to go up because volumes are what allow you to sell more FSD. It's very simple. Take a look at this right here. Our company is currently between two major growth waves. The first one began with the global expansion of the Model 3/Y platform, and believe the next one will be initiated by advances in autonomy and an introduction of new products. Thank the Lord, Tesla. That's very good. We want the introduction of new products. including our next-gen platform. Good. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. Okay, well, the growth rate achieved in 2023, let's see here, 2022 vehicle deliveries, Tesla. Let's go ahead and look that really quickly. So we had vehicle deliveries 2023 were 1313, and we went up to 1806. That was about a 37% growth rate in 37.5% growth between 22 to 2023. So notably lower is probably going to be in that, you know, maybe 10%, right? So let's write that down. Notably lower, probably 10%. Okay, got it. As our teams work to launch the next generation vehicle and other products. In 2024, growth rates of energy deployments and revenue in our energy storage generation business should outpace the automotive business. The growth rates. Yeah, of course, like total revenues won't, but you'll grow energy more than you will the automotive business. Okay, that makes sense. We have sufficient liquidity to fund our product roadmap. That's great. Long-term capacity expansion plans. We manage, okay, good. This is good. We like to hear this because we don't want to hear that they have to raise money, right? So no money raise is really what they're implying here. Okay, we are trying to get to more than 50% growth over 2023 production before investing in new manufacturing lines. Ah, there's your Giga Mexico update. Wow. Okay, interesting. So they want to push to 3 million vehicles before building out Giga Mexico. That's my take. So think about that for a moment. They're going to try to get from about that 2.5 mil where we sit now to 3 million vehicles. And they're going to try to get there as quickly as possible before they go on to building more gigas. Okay. And let's see here. Let's see. So then we're going to have energy storage deployments increase sequentially in Q1 to a record of 4.1 gigawatt hours. Energy generation. Okay, so let's go to the top. Let's look at some of the financial lines that we have right here. The negative cash flow is not a surprise, but let's take a look at this. So let's start here. Here's the statement of cash flow. We could see cash flow in Q1. Whoa, that's a hit. That's a really low number. Now keep in mind, this number right here has an asterisk on it due to tax provisions. So ignore that one. But you can see we're just at 1.1 billion of net income right here. Not so fantastic. So I don't love that. And you did get margin excluding regulatory credits. We have that. That just came in at 16.4. That's good. We want it to be above 16. 16.4% ex credits. That's actually very good. Coming under 15 would have been bad. That's actually very good. So that's impressive in the face of these price cuts. I'm happy about that. So I'm going to go impressive. Okay, very good. Then we're going to go, let's see here. We've got depreciation impairment. That's fine. Stock-based compensation, 524 million. Deferred income taxes is pretty nominal. Other, we'll have to evaluate what other is. There's a $2.6 billion charge here under other, so we'll want to see what that is. And then we've got CapEx, which has clearly ramped up. You can see that CapEx really pump up quite a bit here. So that's from 2.3 to 2.7. And then you've got net cash flows from other debts. That's fine. That's fine. Okay, good. So not bad. Now let's go into the balance sheet over here. We currently have assets, cash sitting at $26.8 billion, which is really nice. We'd like to see that. We have accounts receivables, inventories, and prepaids of quite a good chunk as well. That puts us somewhere around another $22 million. Without using those, though, let's just look at some of these payables for a moment here. Some of the payables that we currently have outside of deferred revenue is we do have bills right here. The 3 is deferred. So we've got bills on the desk of about 14.7. 14.7 plus 9.2. Looks like we're sitting about 23.9 in bills. 23.9 in bills. Though obviously your accounts receivables and your cash flows are expected to offset that. But do keep in mind, we did just go negative cash flow, right? Look at that net cash provided by operating activities. Very, very low. We basically went negative $2.5 billion of free cash flow. Now, again, we've got the cash even after we pay our bills, but there's a good chunk here of negative cash flow. And again, a lot of that being anticipated to be related to more staff than they needed to have for the production levels that they have. And so we expect that to somewhat normalize going into Q2 here. So I would expect Elon Musk to touch on that. Okay, good. So then we've got operating expenses, operating margin 5.5, adjusted EBITDA 15.9. This is actually impressive that we were able to grow this right here. Very good. I'd like to see that. Income from operations 1.1. That's good. Net income attributable to common stockholders 1.1. Again, a little on the low side, but everybody really expected this quarter to be rough. Now, this, I will say, is on the low side. I think that pretty much missed all expectations here. So this is definitely a miss, and the stock is moving up on the enthusiasm of newer vehicles coming in. So if I look at the expectations on adjusted EPS, the expectations were 52 cents on the adjusted figure. And so we'll write that down. That puts us a little bit below at 45. And then, of course, we had Troy's figure was 46. I'm going to write that down. Shout out to Troy. Let's go. 0.46 was Troy. So shout out to him. Really good job. So far, I have to say, obviously, it's not a surprise that revenue missed. That was my expectation. Revenue would miss Wall Street expectations. But I am very impressed that margins came in as strong as they did. It is not a surprise to me that we had a free cash flow go negative here. Quite a bit negative as well, by over $2.5 billion. Visa, by the way, in post-market is up about 3%, and Enphase is down about 8% on this news, with Tesla sitting about 6.9% up right now. Now, reduced average selling prices and an unfavorable mix definitely hit Tesla's margins. Not a surprise at all right here. We had a decline in vehicle deliveries, partially due to Giga Berlin disruptions and the Model 3 update. Now, I disagree with that. I disagree here. You produced enough, just didn't sell enough. Now, maybe they could give us some clarity on that, because we had somewhere around 440,000 produced versus the 387 delivered. Didn't really have much of a foreign exchange impact, although it is likely that the strong dollar may hurt this more going forward into the future. So watch that strong dollar. Those higher rates for longer may affect the company. Higher FSD revenue recognition year over year due to the release of the auto park feature. How much did they recognize on FSD? Wait a second here, because this is very interesting. So think about this for a moment. People are on trial right now for FSD, but because they released auto park, they recognized a bunch more revenue to prop up likely margins and revenue. So it would have been worse had they not taken that extra charge. Now, I don't know how much they took for FSD recognition, but I'd like to know that number. I don't know that that matters as much as talking about, hey, we want to do more lower cost vehicles. I think that's very desirable, but that's a little bizarre to me that that we see this FSD recognition on auto park. I mean, it's a milestone, so they're justifying it with the auto park milestone. Okay. Reduced vehicle average selling price and pricing mix. Increased operating expenses primarily due to AI, Cybertruck ramp. We had some other costs related to disruptions in Berlin, Model 3 update, lower costs per vehicle, including lower raw material costs and freight duties. Now, that's good. That's disinflationary. We like to see that. We want to see that disinflation. Very good. That's how we kept some of that margin up. Gross profit in energy generation and storage included the IRA benefit. Good. That's the Inflation Reduction Act. Higher FSD recognition due to the release of Auto Park. I'd like to see what that number actually was, because that's not snazzy to me. I don't love that much. Okay, but I've said that enough now. Relax. Okay, we have storage deployed, so battery deployments are up 4% year over year. That's relatively nominal growth, though it's a really good bump from last quarter. It does look like we bumped supercharger stations by 26%. We need to really ramp that faster if we're going to start accepting vehicles from other companies like Ford or otherwise, but that's still decent. Okay, then of course we had our production numbers here. We're not heavily surprised by these. Okay, here we go. These are our production charts. Nothing here seems to be abnormal or unusual. What we could do here is we could just do a very quick add together. While I add this together, remember the next price increase for the courses on building your wealth will be on April 30th, which is just a day before the Regulation A fundraise ends for House Hack. If you have not yet RSVP'd to come to one of our House Hack roadshows, make sure to go to househack.com/2024. The first roadshows are tonight for the next 8 days. So if you're thinking about investing in House Hack, you had 8 days left. Check all the information at househack.com/2024. So this right here totals up to 2.35 mil, and their goal is to get to 3 million prior to new Giga. So before they go to a new Giga, they want to get this to about that 3 million figure right here. Okay, good. So then this is expected. Model 3 production in Fremont was down sequentially as we changed the product line to the updated model. Model Y production at Gigafactory is at the Gigafactory Texas is at an all-time high, while costs per unit improved to an all-time low. Music to my ears. Absolutely great to hear this. Very, very good. So this is excellent. Okay, so now we're looking for. We produced over 1,000 Cybertrucks in 1 week. That's great. Production at Giga Shanghai was down sequentially due to seasonality and planned shutdowns around Chinese New Year. Demand typically improves throughout the new year. As we enter new markets such as Chile, many of them will be supplied from Giga Shanghai. Okay, so more exporting. Remember, this is our export market, so this makes sense. Model Y production in Berlin was down sequentially due to the impacts of the Red Sea conflict and the arson attack, though cost per unit continued to decline. That's great. So COGS still down despite Red Sea. So despite that Red Sea pain, you're actually still seeing costs come down. So very, very good. But like to see that. AI. Here we go. FSD 12 miles versus all FSD miles. It's a nice milestone right here. FSD 12's pretty good. You know, it's got its flaws, 2 steps forward, 1 step back, but that's not abnormal. We've been investing in hardware and software ecosystems necessary to achieve vehicle autonomy and a ride-hailing service. Whoa, there it is. I don't think we've actually seen the ride-hailing part talked about yet, but then again, we did just announce Robotaxi, which is what a ride-hailing service is. I don't think I've seen it in these actual docs before. We believe a scalable and profitable autonomy business can be realized through a vision-only architecture with end-to-end neural nets trained on billions of miles of real-world data. It became clear that this architecture, long pursued by Tesla, is the right solution as they've gone with V12, which was pretty good. In Q1, we completed the transition to hardware 4 in our latest in-vehicle computers with increased inference. Remember, inference is different from training. Inference is you're presented with the data and you're expected to create or come up with an answer. As we rolled out FSD supervised with a 30-day trial, I thought it was a little longer. 30-day trial to Canada. I thought it was 60 in the US. Blah, blah, blah. We released Autopark. We are currently working on the ride-hailing functionality that will be available in the future. We believe that Tesla's software experience is best in class. You have to give them credit for that. Their software is good. Like, I love that about Tesla, right? Greetings from Germany. Hallo, wie geht's? I see you in the comments. 4680 ramp continues successfully, though remember Troy's estimate here, Troy estimate is only 6% capacity on 4680 cells right now. So we'll see, that might come up in a say.com answer, or they just may punt that question. Let's see here. So far, I still don't have an answer on how much they realized from FSD revenue recognition. That's sort of a little lever you can pull. Services were up Gross profit was down 40% year over year. Biggest driver in gross profit reduction was the lower used vehicle profit. Okay, got it. So making less money on those used vehicles, mostly probably because prices have sort of been falling. Starting at the end of February, we began opening our North America supercharger network to non-Tesla owners. Yeah, I'd like to see a chart of how many non-Tesla owners are using it. I haven't actually seen a non-Tesla owner in person yet using the superchargers, but I know that day will come. So we've gone through this. We've got some photos here. Global BEV market, battery electric. Here's just sort of an idea of the Tesla ecosystem. Look at this. This is what they're trying to promote right here. And look, they kind of give you like a little screen grab mock-up here of maybe what that ride-hailing service could eventually look like. Still obviously waiting for details on that, though. That's very exciting. Cybertruck final assembly line. Cool. Looking good. Supercharger network. You can see here, looks like a shout out to Rivian. I've got a Hummer here. I think that's a Beamer. And then, of course, you got a Cybertruck. Ah, look at that. Summon. Hold to order. 3 minutes away from the Stanford Shopping Center. 4 passengers max. Set the climate. Oh, that's cool. I like that. Yes, frickin' please. Oh, yeah, they really emphasize that. That's nice. That's juicy. And then maybe even the volume control, what music you want to listen to, the seat. This is great. You know, I mean, they're mock-ups, they're ideas right now, but it's very cool. Dojo Training Center, not a render. I love that. This is very cool. Very good. Their chassis are very beautiful. They do have a very good eye for design, so I like to see that. Squeezing every penny out of the vehicle production cost. Yep. This is just sort of a way of disassembling vehicles, trying to evaluate how can we make sure we optimize how we, use Ethernet connectivity or whatever to minimize costs. We've gone through some of the financial statements already, though we have not yet seen how much has been recognized from automotive revenue recognition via the FSD. And there's also an other expense over here. Is that other? Oh, no, I'm sorry. Other is 0. It's actually just change in operating assets and liabilities. Okay, that's not a big deal. That could just be like the, ownership in Bitcoin or treasuries or whatever they have. I don't really see any other revenue recognition here, though I might be missing it on my first glance through this. And we're going to look to see what the suits are saying in just a moment. So, very good. I actually think this is substantially better than expected. I do want to throw down some pluses and minuses here. So let's do some pros and cons here to give just a little bit of at least an initial sum. So feel free to join in on this in the chat here. Give me some pros and cons of this, okay? So I would say definitely a pro here is that automotive gross margin at 16.4%. That's fantastic. X credit margin, very good. Love to hear that. More affordable vehicles, that's clearly a pro. Obviously, the negative 2.5 billion in free cash flow is clearly a con. That's not great. We have free cash, but we also have quite a few bills to pay. One call is Elon's not going to get margin called. Oh, let's see what some of y'all say here. New car line, right, yes. The new production line, basically taking the best parts and starting to implement. And then sort of the goal there of getting to 3 million vehicles produced. That doesn't necessarily mean we're going to sell 3 million right now, but I am going to go ahead and put that under the pros over here. And so we'll go ahead and put that 3 million vehicle production target prior to new Giga. That is also a way of being capital efficient. They're trying to tell you, hey, look, we need to save some money here. It's a tough time. We're just going to focus on trying to implement what we can right now from our new production line, and we're going to go from there. So Wall Street is suggesting that Tesla shares are gaining based on hopes over AI rather than the actual results. That's fair. I mean, the results weren't actually great, right? We had a miss across the board, miss on rev, miss on adjusted EPS. And then obviously notably lower sales compared to, or I'll just put verse 23. There we go. That's not a surprise. Okay, Robotaxi, yeah, the Robotaxi. I mean, we kind of already knew the Robotaxi announcement, but some mock-ups are kind of cool. That's more just sort of generic, though, but we'll go ahead and throw that over there. Very cool. Then we've got, let's see here. Free cash flow was horrible. That is true, but we have the numbers. The guidance was optimistic, but they didn't give guidance, mind you. I mean, like, I guess you could call this guidance, but this isn't really guidance. It's like, yeah, things are notably lower, and, yeah, suck it up. We did have that headline margin beat, though, so I do want to give credit to that. Yeah, that's X credit as well as 17.4% margin with credits. Lower COGS versus 16.5 expected. That was pretty good. The margin beat was good. Supply prices coming down. Absolutely correct. Then we've got, yeah, no mention of Bitcoin. I have seen. Do a Command F for that. No mention of Bitcoin. Tesla semi-pilot production, still BS. That's fine. Yeah, this is hope on the new affordable cars. That's what we've got going here. So, bouncing FV losses, yep. No mention of India here. In fact, if anything, it sounds like, yeah, that would be a con, right? So, Giga Mexico probably delayed. That's not a surprise. They made this very clear. They're going to preserve their cash to make sure that they can get to 3 million vehicles produced. They'll preserve cash until they get to 3 mil, and at that point, they'll come up with a new manufacturing line. They frankly probably have enough. Let me see, BTC holdings. They probably have enough in Texas, enough space. So they don't actually really need that at the moment. So then we've got, pretty neutral, benign results here. You've got, let's see here. Let's see, someone drove into me in a Tesla yesterday. I'm sorry. I hope you're okay and hope your car gets fixed fast. Let's see here. Nothing but hopium, says someone. Does today's earnings change your recent post of a price target to 160? Let's do it. That's a good idea. Let's play price target analysis here. So we did just get some guide. We expected that we were going to miss on rev, so that is what we saw. Let's go to the chart that we've been using here. So what we're going to do is we're going to ramp to 3 million vehicles, okay? That was actually in my, like, bullish case scenario that we get to 3 million vehicles. So I'll pop up that 3 million vehicles. I also expected 17.5% margin. Honestly, I might give them a little bit more credit for this because they held on to that 17.5%. And I think by 2026, like going forward, we might actually be back to about 20%. So I'm going to go ahead and make that cost 80%. I like what I'm seeing here about the cost reductions. A lot of that is obviously going into price reductions. No talk about advertising or ads or whatever, so we'll see what happens in the earnings call on that. That's still a while away, but we could do a little analysis here. So 3 million vehicles, average selling price of 44K. I'm going to hold that firm. What do we have? Let's see if energy is realistic. So our energy revenues right now are, just to get segment revenues, segments. All right, energy revenues right now, we're looking at energy generation and storage. We're looking at about 1.1 a quarter, and for the year, that's going to put us at about, let's go 1.3 times 4. That puts us about a 5.2. Honestly, it's probably high. We're probably going to want to drop that to about 8, maybe like 10 bill, something like that. So I'm going to drop energy a little just because I think that's slightly high. I'm going to go leave FSD here at an 18% take rate on a fleet of 12.5 million by 2026. Keep in mind, some of those cars are going to be out of the country. Some of the cars aren't actually going to be functioning in America. Now, we are going to have this robotaxi fleet. There will be expenses to the robotaxi fleet for the first few years. So I'm going to put 50% expense in on robotaxi. And I don't think we're going to see robotaxi really generating substantial revenues until probably 2026 at the earliest. That's why I am pricing it in here. I'm going to go ahead and price in about 10% of Uber here. I'll go with about 5% of Uber's revenues here. So that would be 650. There we go. No, I didn't do that right. 1850. There we go, 1850. So that gives us a little bit of variation between the two. And then we're going to go change that to a 20% margin, which with the numbers today, I don't think is actually horribly unrealistic to get that 20% margin. Now, the problem we're going to have is growth. What kind of EPS growth are we projecting here? Well, earnings per share sucked. Let's go. Earnings per share came in at 45 cents. Remember, Troy's estimate was 46, so he was definitely the closest. And these numbers repeating would be very bad. So, but it does set for a low year. So if I go to Tesla and I go to earnings, we're going to be looking at, I mean, if I just take, oh boy, attributable to Sharenica, that's attributable to shareholders, that's fine. 37, Q1, where was Troy's? Oh, because that's not the adjusted, that's GAAP. That's the non-adjusted. Give me the adjusted. So, well, I know it was 45 cents, but I'd like to see it anyway. It's probably at the top here. Yeah, this is where it's going to be. 40, there it is. Non-GAAP was 45 cents. So if I go 45 times 4, so I just annualize this quarter, I'm only at about $1.80 of earnings, right? And so, but this is important because we'll be able to evaluate our earnings growth, which right now Wall Street thinks will probably be somewhere around 25%. But we can jump in to this spreadsheet and hop in and go, let's go with, let's see, we got 20% earnings growth. If I do this in 2026, I'm going to be growing at more than 20%. You'll grow at more than 20% because you're at $2 now. I mean, you'll like 2.5 by then, right? If you actually include some of this robotaxi rev. So, but that doesn't necessarily mean the next 2 years will be as good. So if I go from $2 to there, what do I have to grow by? With the whole of all of this year, let's see here. If I do 2 years, that would be 2025, 26, probably be about 50% earnings growth, but that's not going to be the average over the 4 thereafter. So if you go with 20% average, it's pretty good. By the end of 2026, you could potentially reasonably get to that 260 figure again. And if you pump the earnings growth, the valuation will expand. So these numbers aren't bad. And seeing that non-margin miss, I'm really happy about, as well as the waking up sort of realization of like, yeah, we're all for more affordable cars. So I don't dislike these numbers. These aren't bad. I do think the free cash flow numbers obviously are a little poopy, and they are hurting our earnings. I mean, we barely had net income here of earnings, so not great. But let's take a listen. Let's just see what some of Wall Street's got to say about this. That's not about Tesla. Let's go see if Doomberg has something for us. And then I'll also see what some of the suits are saying on Wall Street first quarter earnings. Let's listen in here for a moment.
In the week ahead, Meta, Alphabet, Microsoft reporting this week, as are...
No, okay, that's boring. They're just talking about other... Okay, here we go. So here's some other notes. Even if it's a relatively small slice of the pie, Tesla's energy storage business is growing faster than its car sales. Well, yeah, that's because the car sales are growing basically at zero. So that's not really a surprise. I don't actually even think that's something to cheer for. I'm not really cheering that the energy business is growing better. But I will say, Tesla right here, bobbing around this 153 level, not bad. This is a support line that we have. We have the support line drawn at about 152, although we didn't get a lot of respect for it. We got more VWAP movement there than we got for that line. That's why I paint them yellow. The yellow ones work well on the day. So, progress on bringing costs down. Tesla doesn't have to go all the way down to $25,000 cars. If Tesla can get its vehicle prices down to $30K, that would open up more of the U.S. car market. Around 87% of car sales in 2023 happened at 30,000 or higher. Okay. Interesting. So, I'm not sure what to make of that one. But, I mean, let's take the data and make of it what we want. So, 87% of U.S. car market sells above 30K. I think what they're trying to say is like, so if you sell close to that 30K number, you're good. So maybe have a 30K car instead of 25, which you almost kind of do on the Model 3. The Model 3 is pretty inexpensive there. Okay. So let's see. This is very interesting. Share reaction. It's all on forward-looking commentary. There's literally something for everyone in this print. The shareholder deck cautions that cost reductions won't be as deep as they've been historically. Specifically, the 25K car seems unlikely, but there's an accelerated process with bringing average selling prices down across the lineup. Yeah, okay. So Tesla is coming for both Waymo and Uber with the ride-hailing functionality. Yes, this is an interesting acknowledgement. Global EV sales continue to be under pressure as others move to hybrids. The affordable vehicle is still planned to go in production. That's good. Rooftop solar has been plummeting. That's true. Tesla hasn't been as highly focused on that. That's okay, though. It's a tough market with rates. It'll be fascinating to see how Tesla transitions to become a major charging operator for other EVs. That's also true. Still in pilot production for the Semi. True. Let's see here. Pulling forward affordable models, but how soon would those models launch and when? Right. So that's a good point. Let's write that down. Also, when for affordable versions. Let's see here. Didn't disclose its deployments of solar. Interesting. That's true. They only did storage. How interesting. Let's write that down over here. No disclosure on solar, just on storage this time. That's the first time we have seen that. That is a good point. Okay. Let's see here. Tesla continues to argue the company is between two major growth waves. Yes, we've heard about that. Okay. Let's see. Chile on the bingo card. Yeah, no kidding. Tesla spending a lot of cash, CapEx. Yup. And Outlook, a purpose-built robo-taxi product will continue to pursue a revolutionary unbox theory. Yeah, okay, so that's just the idea that you could sort of have the vehicle in one place and multiple parts of the vehicle being worked on at a time as opposed to going down the assembly line. Tesla is not alone in feeling the pinch from supply chasing, waning demand. That's fine. Okay. Wow. So we will now see what the call has to say. But this does seem to be sort of a return to Elon's master plan, right? I am going to write that down. I like that idea. Yep, that's BlackRock. We talked about them in another video on the main channel. Feel free to go look at that. But let's write that down. Feels like we're back to master plan Elon Musk. That's the Elon we like, right? So Robotaxi event unveiling is in 107 days. So 107 days to Robotaxi event. Okay. So very good. Then let's see here. Let's see. Enphase, stable market in the U.S. Add U.S. battery manufacturing in Q3. Sees a bottoming of the market in California. Dude, they've been talking about a potential bottoming for a while. But it does look like Enphase had a little bit of a bounce there off of 100. Bitcoin down to about 66.3. The Qs are actually up in the afters. And Visa did also report, as well as Texas Instruments. Both of basically everything's up except for Enphase right now. So good job here on Tesla. All right, getting some more insights. Let's see what they've got to say to us. Nothing. Okay, let's hop in over here. So let's go. I'm gonna get some reaction. Yeah, okay, it doesn't matter. Let's go ahead and get some other reaction. So, yeah, again, free cash flow numbers bad, but definitely some positives here. Higher margin than expected, good. Some of the higher expenses were addressed with cuts. That's great. Let's see here. Yep, people are sharing images of the sort of the images of the robo-taxi. Okay, that's exciting. So Gene Munster, Tesla stock is up 7% because of new vehicles. Could be Model 2 or robo-taxi will come sooner than investors expecting, likely starting production in mid-2025 instead of the second half. Well, I mean, that could be the same thing right there. But yeah, I mean, that's great. As soon as we saw that, we knew this is actually great. And this talk about potentially more than one, right? Let's write that down. Could there be more than one affordable model, since they did say more affordable vehicles, or is that just a way of suggesting, hey, maybe we want more sales at lower prices for our existing, plus maybe some other models? Good. So let's see here. Okay. So that's the Model 2. Looks like it's on the horizon based on the press release. More on the call. This could be a major focus. 100%. That's from Dan Ives. We've got negative free cash flow 2.5 billion in Q1 versus the positive 653 expected for cash flow. Totally correct. Let's see here. Okay. What else? What else? Let's see here. Just trying to get a little bit more reaction here. Seems like people overall pretty excited here. Robotaxi and really the new models. That's what's driving price action right now. So a bunch of people sharing screenshots. That's great. Overall, very good. So let's try to catalyze this and put this a bit together here. Enphase Energy popping a little bit right here. Look at that run there on Enphase. Let me see what the latest is we have from Enphase to see what there is. Battery inventory channel nearly normal. Microinverter channel normalized by the end of Q2. Well, that would be good because then they can actually start growing sales again. So that's what you're seeing is you got to get through that sort of inventory move. And it's a good report from Visa as well. So I have to say, so far, these reports, not bad. These were decent reports across the board. Visa, Enphase is looking for the bottom. Obviously, they're down on this news. And Tesla doing an overall decent job with some of their figures here. So I guess what we could do is we could sort of do an initial summary here of what we thought about these Tesla earnings. Yeah, let's take a sip of coffee here and do a little summary here. Okay. Initial summary. Okay, perfect. Yeah, I know a lot of people who are just now joining are looking for something like that. So let's go for it. Right. Oh, you know what we should quickly do too is let's quickly see how our number actually compared, like expectation versus reality on those Tesla numbers for the deliveries. Remember we did that estimate to see what do we actually think the Tesla numbers will come in at. And that was this sheet right here. And that's why we thought Tesla would end up missing, which they did. They did miss. Revenues actually came in at 21,330. So let's write that right here and let's see what the numbers looked like. So that was 21,301. 1, 2, 3, 55. A little uptick there, yeah. As some of those costs came down, not bad. But certainly not as high as what Wall Street was expecting. So that did seem like a bit of a lofty goal, which makes sense why there was a miss, but not that really mattered much, given that now we have a focus on more vehicles. So pretty good. Okay, so let's go through some of the update here. Let's see. All right. Let's see what we got. There we go. Okay. Wow, this is incredible for Tesla. Tesla must have been reading the room because they basically reported bad numbers, but gave us exactly what we wanted to hear, where we wanted to hear it. I was highly concerned that margin for Tesla would come in under 16%. But margin X credits actually came in at 16.4%, better than expected. Congratulations, Tesla. Margin with the regulatory credits, 17.4. Part of that is not only because costs are falling for Tesla, freight costs and input costs, which is less inflationary, which is good, but it's also because Tesla is taking advantage of more vehicle credits because less of the competition is taking advantage of vehicle credits. So there are more vehicle credits available for Tesla since they're the US manufacturer focusing on EVs and others are focusing on EVs less. Now, the big win from these numbers from Tesla came down to the potential for more affordable vehicles. This was a really critical part of the Tesla earnings release. And we can actually see that on screen right here. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start date in the second half of 2025. And so basically what they're saying here is, hey everyone, look, we heard you that you really value cheaper cars. So here's what we're going to do. We are going to push the current production capacity from about 2.3 million all the way up to about 3 million vehicles. And they didn't give us a time frame for when they want to get to 3 million vehicles, but they want to get to 3 million vehicles, or at least close to 3 million vehicles, before they manufacture another gigafactory. So hold your breath. Giga Mexico, Giga India, Giga whatever is probably not going to happen for a while. That's going to get kicked down the road. Instead, we're going to take that CapEx money and we're going to spend it on AI so we can get closer to robotaxi. And rather than waiting for the next generation manufacturing lineup, what we're actually going to do is we're going to take what we've already bettered and we are going to make the manufacturing line more efficient now so we can bring our costs down for vehicles, potentially then reduce prices, also with, as we've said before, potentially these lower cost existing vehicles, but also potentially with lower cost new vehicles. So a big shift here from Tesla. This is very good. So I do like to see this. This is fantastic. Now, what it does is it implies, and we'll see in the earnings call what we get, but it implies that we could end up getting multiple new vehicles, and that is just juicy to Tesla shareholders. Tesla shareholders want to hear that. So great news, Tesla here. Again, Tesla read the room very, very well on that. Now, something else to note about Tesla is we did have the expectation that revenue growth or production growth would be, quote, notably lower. So that's unfortunate. So that means things are probably still going to get worse in the realm of deliveries until they get better. But at this point, that might be mostly baked into the valuation of the company. So instead, they're going to continue to focus on getting those costs down, stabilize their deliveries and production, and they could end up releasing more than one affordable model. Well, again, we'll get clarity from Elon on the earnings call, which we'll cover later. Now, it's worth noting Bloomberg suggested that 87% of the car market sells above $30,000. So and this is in the United States. So they kind of suggest, hey, maybe you don't even really need a $25,000 car. Maybe you just need more variety at a $30,000 car. That's entirely possible. $30,000 car instead of $25,000 car. Now, the question is, when are we going to get that more affordable car? Well, that remains to be seen. And so we'll see what gets talked about in the earnings call. Now, as far as some negatives, we did have negative $2.5 billion of free cash flow, though we do have quite a pretty penny of cash on hand. And Tesla did recognize some more FSD income because they released Autopark. Now, I thought that was a little bit of a funny reason to take FSD revenues, but that's what they chose to do. So if you look on their balance sheet, you'll actually see they've got about $26.8 billion of cash. And then as far as other current assets, including accounts receivables, inventories, and prepaids, which I generally don't use prepaids, but those do offset some costs. We'll just do 16 plus 3.8, puts us at about 19.8 in receivables, plus about 26.8 in cash, minus 14.7 in bills to pay, minus 9.2 in bills to pay. That does, if we do include receivables and the inventory, that does put us somewhere around $22 billion of available current assets. If we just wanted to look at free cash to be a little bit more sort of acid test-ish, this is sort of Kevin's version of it, we're down to about $2.9 billion of cash, which is not a great amount of free cash. You don't actually have that much free cash at Tesla. So you are doing a lot of bill management. And if you have another negative $2.5 billion quarter, well, let's just say that free cash is going to start dipping into receivables very quickly. And while, yes, at this point, it seems like they've got enough money to finance all their activities, there could be some bumps in the road during 2024. So I don't think by any means 2024 is out of the woods, but this is clearly part of the bottoming process for Tesla that the stock performance has been in, and obviously the changes that are now occurring at Tesla. So those are all things to pay attention to. Now, something else to consider is if we go, and we'll do a valuation model again in just a moment, but I just want to make sure I hit the core of this report. Again, they're taking the best parts of the new production line, the robo-taxi. They threw up some mock-ups of the robo-taxi event. This was very good. Again, we're not getting a disclosure on solar. We're probably not getting Giga Mexico or any other Giga for the time being, and they are expecting notably lower sales from 2023. This is not a surprise, though, at all. Instead, Tesla is teasing this, which is the robo-taxi app, and this would be hold to order your robo-taxi. They're throwing in estimated wait time 3 minutes. 3 minutes away, you could set the climate, which is kind of cool. You could set the music. You could set the volume of the music. This is actually kind of cool. I don't disagree with this. I think this is very smart. I like the mock-ups. They're just mock-ups, so for what they are, they're not extremely valuable right now until we actually go into launch mode, and that is going to require the vehicles being fully autonomous and having regulatory approval, which maybe we'll get some guidance on that in the earnings call. But as of right now, the stock is up 9%, which is really good. The expected move on Tesla stock today was 8.2%, and we are nicely bouncing off some longer-term trend lines here. These have been, there's some longer-term support lines just below where we are, depending on how you draw them. Some say we bounce off them nearly perfectly. You are sitting now at about just above that 152 level. Next stop for Tesla would be really to decide, are we going to stay below 160 or are we going to go back up to 170? So that creates some interesting opportunities, and it's worth doing a quick little valuation update on Tesla. So let's go get the spreadsheet and play the valuation a little bit. And I'm going to change some of these numbers here just so we could play with them together and see where the actual value is going to come from investing in Tesla. I think that'll be super valuable. So let's jump into doing that right now. Quick reminder, we do have the courses on building your wealth with an expiring coupon code on April 30th, which is the day before the expiration of the House Hack fundraise. You could go to househack.com/2024. Here's our Tesla spreadsheet. Househack.com/2024. Be part of the roadshow that begins tonight. Next 8 days, we got a roadshow, and then we got about a week for that next coupon expiration. So let's play some numbers here. What I'd like to do is actually bump the Tesla margins for 2026. I'm really optimistic about seeing some of this cost reduction, though I'm going to go with two versions here. I'm going to go with let's go play this like this. Let's go move everything to 3 million vehicles. Mind you that 3 million vehicles, they did say close to 3 million vehicles. So 1.8 times 1.3, 1.3, that'd be about 30% production growth. I don't know if we're actually going to be able to sell that many vehicles. So I'm actually going to discount this a little bit. I'm going to go with 2.5. I'm going to get rid of these headlines here. We're going to go with 2.5 million vehicles by 2026. Actually, you know what? Let's go with a lower one. Let's go 2.250. Let's go 2.5 million vehicles. Let's go 2.75 million vehicles, and then we'll go 3 million vehicles in our more bullish case scenario. Then for robo-taxi revenues, what I like to do is I like to do a percentage of Uber. So what I'm actually just going to do here is I'm going to put about $37 billion of revenue that Uber is able to make, and we're just going to create or use a percentage of that. So we're going to, again, go with $37 billion here. 37 billies. There we go. Let's go ahead and write that in. It's always entertaining writing these large numbers. And then what we'll do is we'll create a percentage for each of these. So this one's going to be times 0.10%. And what I'll probably do is grab... let's do this. We'll probably go with a lower percentage for each of these other scenarios. So we're going to go over here and we'll go with 0.75. Here we'll go with 5% of Uber, and I think we could floor out at about 5% of Uber. We shouldn't do that. Well, let's go with like 2.5% of Uber. There we go. How much revenue we might be able to keep. Now, the other thing that I'd like to do is remind you that I'm going to go with a 50% margin on these because you still have to make the car, you're going to have to service them, and we're only going to 2026. Obviously, in the future, we expect the margin to be a lot better. I also reduced energy a little bit to about a little under 8% because I'm not sure we're going to get that much growth with these higher interest rates, assuming obviously we don't go into a recession. Everything changes if we go into a recession because interest rates will come down substantially faster. Now, I want to run this two ways. I'm going to run this one time at 18% margin, and then one time I'm going to run this at 80% margin. And you'll be able to see some differences here. Quick fact check, we got 50% on margin for Robotaxi, 82% on the expenses for the actual vehicle sales, 19% tax rate. Okay, fantastic. This gives us a price target on the low side, the bearish side, with a 20% earnings growth of about $150. Now, I think that might be a little low. Let me see here. That would, yeah, that's probably a little low. We probably need to be closer to 25, maybe even honestly 30% revenue growth. So 30 gets a little stretchy, but let's go with it. If I go 30% revenue growth over here, I could get to 225, 2026 in the more bearish case. It's actually decently bullish. If I stick at 20%, we're kind of where our pricing is now. So you kind of bottom out around this 150 level based on these fundamentals here. And then, of course, everything beyond that is icing on the cake. That's usually how I like to invest. I like to look at my leftmost figure, and then we grow from there. Obviously, if we could get to a 30% earnings growth and we get the highest level of deliveries with a good margin here, we're going 18% in this case, we can knock on the door of that 358 again. Now, if we can then hop on over and get margin to like 80% or something like that, well, then we could really get these numbers to move up even more from 250 to about $400 per share. So not bad. Now, do keep in mind, this also includes FSD revenues at 18% recognition for the three most numbers. It includes nothing for the leftmost number. So if I include the leftmost number and I include expenses on AI, let's see here, AI, FSD. Okay, these numbers, I'm sorry, we're gonna have to move this up. We're gonna have to move up the expenses on FSD. Those expenses are way too low. We're gonna spend way more than $267 million on this. So I'm actually gonna go with, honestly, 50% is also probably kind of low until 2026. But let's go with 70% expenses. That's going to have our annual, remember, these are annual numbers, annual expenses at just under $2 billion. We just spent $2.5 billion on CapEx, and I think it was like $1 billion on AI in one quarter. So I think 70% is probably the best we really want to go here. That is going to lower some of our numbers, but again, they're still actually pretty dang decent. So I have to give credit where credit's due here. This is good. And depending on what we hear from Elon here on lower cost vehicles, will really sort of dictate what direction Tesla ends up moving here. So overall, I have to say these numbers are much more impressive than feared. I am obviously concerned about a large negative free cash flow. I'm concerned about how quickly we can realistically get to Robotaxi, because that's the other thing I want you to keep in mind. This model we just made does assume we're going to Robotaxi. If I go in here and I go ahead and just kill Robotaxi for 2026, let's say Robotaxi just doesn't fly, okay? And that was at 20% margin. And we go back to the 18% margin. This is probably your more bearish case, right? So 18% margin and the Robotaxi sector gone with a lot of FSD revenue being spent on commute. You're still at a low of about 229, unless, of course, the EPS growth rate sucks, and then you're at a floor of about 152. So I think you floor out probably about 152, which is roughly around where the stock is trading right now. So that's good. This is definitely better than expected. I'm a data person. I I like these numbers. Now, is it possible that Elon Musk is going to say something loony on the earnings call? Duh. Is it possible that we end up going into a recession? Duh. So these are things that we're going to have to contend with, along with the fact that rates are likely going to stay higher for much longer than we've previously anticipated. And those create some other risks for the market as well. So next, we're going to have the Tesla earnings call, and we'll cover that next. But just remember, on April 30th, the Stocks and Psych course will have an expiring coupon code. I want you to take a peek at one of the trade alerts we sent today. I made some money on it as well, and it had everything to do with this 140 line we drew, 145 line we drew on Tesla, and just the rejections we were getting. You could actually see us talk about this live in the course member live stream this morning. So we do those every day the market is open. So check those out before April 30th, and email us at staff@meetkevin.com should you have any questions. Okay. Good. So that's a summary video. I'm going to export that summary video, but I want to see what other commentary we're getting here from Wall Street. Let's listen in.
I mean, Phil just said it. The quarter was not good, and there's nothing that actually leads you to believe that they're going to be turning the tide from a fundamental standpoint this quarter in Q2, and maybe not even in the back half of 2024. So to me, it just seems like, stock got really nailed into the print, and it's kind of releasing. Listen, this call hasn't even started yet. I mean, the fact of the matter is, this stock could be down in an hour or so, given, like the Q&A.
You know what? I'm going to tweet something that I think everybody should agree with. Let me know what you think of this. Hold on, I'm gonna put it up on screen in a moment. I don't know, maybe people won't get my humor and then people get mad at me. I'm pretty good at people getting mad at me when but let me know what you think about this. I just tweeted this, and yeah, there we go. Okay, right here I wrote, "Dear Elon Musk, please just cancel the earnings call. We're good. Thanks." Please just don't show up. Like, please, just technical difficulties. Sorry. No earnings call today. We're good. We'll take our 7%. So, I don't know. So, it's just historically, the earnings calls are usually a little problematic, okay?
In robotaxi, and I don't know if now are they pulling back on that just because that's what they think the street wants to hear, or is that in fact really the direction they are going? I don't know. That will be important on the call.
Yeah, that's a good question. Yeah, Phil said there was just one line in the release about the robotaxi, so we have a lot more questions. Tim, I mean, delivery growth.
What do you mean there was just one line on the release? What are you smoking, CNB Sizzles? Come on, they literally had diagrams of how you could use the robotaxi. There was just one line about robotaxi on the release. What are you smoking something fancy? Or, as some people would say, take another hit. Unbelievable.
The hocus pocus, nothing up my sleeve. While we talk about this, there's something going on over here. And I think that's exactly what's going on here. Meanwhile, it's kind of ironic. Maybe, lower price models. Meanwhile, their existing models are going lower, too. They're cutting prices. They cut prices more over the weekend. The one thing that the analyst community can look at in terms of margins is where the software adoption, the FSD adoption, because it's very accretive to margins. They're cutting prices there, too. What's that going to mean? Well, it might be ultimately actually positive for overall margins. But I just think that there was not any expectation here. That's why a 6% is kind of let's call this a relief rally. I don't think, and we've discussed this probably for the last 3 months, certainly since we got the delivery cuts and some sense that these numbers were going to be so poor a few weeks back, is that there's not a lot of great news for Tesla until we get, and as we've said tonight, into the second half of 25.
Guy, when you look at the chart, we're so far off from even recent highs. I mean, what would it take to get us there? Is there a trade here?
I don't think we're getting there.
These folks are a little bearish. It's actually interesting. Like I'm hearing a lot of nonsensical bearishness here from CNBC. I like this. Remember, I don't trade in after hours, and I don't make decisions, in the span of a minute. I sold to tax loss harvests, expensive tax lots between 171 and 175, sort of the various places in between there. And so my thought was that the stock would be mostly stable for 30 days, and there wouldn't really be much news before deliveries. Holy crap! The amount of crap that happened over the last 45 days is insane. So I'm outside of my 30-day window already. But I used some NVIDIA sales to offset some of those. And I saw it as an opportunity because I didn't really think there was a lot of risk that the stock would go above that range in the near term. And so that ended up being right. But if I could rebuy, or if I were to rebuy, I get like a $20 discount per share right now. Who knows? Anything could happen at the open. Anything could happen in this earnings call. So we'll see, but we'll listen in.
Was the CEO of a company that just a couple weeks ago was $600 billion market cap company, right? He's the CEO of SpaceX, which is probably the highest valued private company in the entire world right now, right? And then you think about Neuralink, you think about Twitter, you think about a whole host of other things that we don't even know what's going on. It just doesn't make any sense anymore. This company is facing an existential crisis as it relates to their own infrastructure. That doesn't mean about the shift towards EVs, okay? But this is the first year that we've seen, Tim's point, we're seeing year over year revenue declines and delivery declines, and they've never faced that because they've owned the market. Now in one of their biggest markets, which is China, they have competition from everywhere. And a year ago, if we said that on this show, people looked at you and they'd call you an idiot. You don't get what you're doing here. And you know what? BYD is shipping $20,000 cars. And Tim's point...
Honestly, the more bearish these people are on TV right now, the more bullish I'm getting.
Going where they are. So to me, it seems kind of uninvestable if you just think of this as an auto company. And I know you guys probably have plenty to say about what GM just reported and that's the important part.
Well, GM, and so they've also kind of cautioned on margins maybe in the second half of the year because of rising EV production and deliveries. So, but GM was up 4.5% today. This is GM that actually beat and raised, great output. And it does look like we know there's competition. It's just interesting. I'm not here to tell you that GM is the major competition for Tesla here. And in fact, I think we've all said that there's been this dynamic where people think maybe GM and Ford are more, certainly a Toyota are more, game on in hybrids. But either way, it does highlight where you've got obviously a traditional OEM where you've got a real revenue, but a real margin story and a company that's never been more profitable in GM. And that's the name that I think you stay long. I think we can talk about that or we cannot. Either way, I think that's a company where I think the trend, both of the chart and the fundamentals, is on your side.
We've got a little bit more on Tesla's results. Let's bring in fast money friend Gene Munster of Deepwater Asset Management. Gene, it's great to have you here. What are your thoughts here? We know the conference call hasn't kicked off, and we only just have the release. So
yeah, we'll be covering the conference call, mind you, in about 20 minutes. So I'll be covering it live.
Well, I think what it's come down to is there's a question: is Tesla smoke and mirrors, or is it substance? And I think the results this quarter are going to give evidence for the smoke and mirrors camp to think that this is just another car company. And I think that there is really little to be gained. I think one thing to be gained is that margins are declining, but they're not plummeting. They actually did a little bit better than expectations, still on the decline, but a little better than expectations. So they're going to survive. They got $26 billion in cash, but this ultimately comes down to is, do you believe? If you believe that the future is going to be hybrid cars and it's going to take a long time, 20 years to get to full electrification, stock's not going anywhere. If you believe that electrification, despite all of its troubles now, are going to accelerate for multiple reasons, and you believe in the concept of autonomy and robotaxi and that they're actually going to get this out, Tesla's probably the best position. They are the best positioned company to deliver on that future around autonomy and electrification. It's a big market, $2.5 trillion market. The smartphone market, $600 billion. And so I think that's what this ultimately comes down to. As the panel has said, stock, it's going to move based on what happens on the earnings call at this point, some commentary. I still think the street numbers are coming down for 2024 on delivery, so I think that could pressure the stock tomorrow. But ultimately, this company is going to survive to see this next generation vehicle and to see FSD and see the rising tide of electrification. So I'm still a shareholder. I'm still optimistic. And I think that I just believe in what they're doing from an innovation standpoint.
Do you think the stock movement is justified based on what we got from the release, just on the next gen vehicles and perhaps better than expected margins when everything else was pretty crummy?
No, it's understandable. I mean, you can reason why it's up because people are so desperate for any good news. And given the Reuters reporting more recently that they're canceling this initiative on the 2025 initiative, the fact that they're moving it up, that is a directional positive. But again, I think that 2024 is a throwaway, and stock could keep going down. It could be flat. If you again believe in a future of electrification, Tesla is the best positioned company. But as far as this results, my guess is that stock probably fades in the next 2 weeks, finds its ground, and then as we get closer to 25, starts to rebound.
Hey, Gene, it's Tim. So can we reframe the kind of the investment rationale in terms of either where we're talking about a fair value, whether we're talking about growth versus something? And I can appreciate the dynamics here, which they are so far ahead. It's a technology company, but it does get back to that juxtaposition to they're not GM, but at the same time, they are an auto company. Can you talk about that multiple in Tesla and why you can stand behind that?
So I believe that this should trade at a similar multiple ultimately to Apple. I think that what they're doing around hardware and software, autonomy as a service, I think justifies that type of a multiple. And when you, right now, the multiples, stock's going down because earnings are going down. But on a revenue multiple, I think that is justified. And so why is that justified? Is because we get back into a growth phase. Investors tend to look more at revenue growth than they do at earnings growth. And so if you, just to kind of put it all together, if you build a case that they can grow revenue at 20, 30, 40% as they come out of this trough and do a 7 multiple on that, the numbers you can get to a stock that's double where it is today. And so that's where I get it, is a belief that the growth is going to reaccelerate. And why do I believe growth is going to reaccelerate? Because I think it's an undeniable truth around electrification. I think traditional auto is making some grave mistakes in terms of slowing, which is an advantage for Tesla longer term.
Gene, it's Karen. Thanks for being on today. What do you think the math is around robotaxis? How do you think about it? What is the model there?
So it's pretty powerful. If, again, you have to believe, it's like a religion. If you believe that this is going to get out, I happen to be in the camp that I think that they will eventually get this out. I think, by the way, Lyft and Uber, they're in big trouble if, in fact, Tesla does get this, because anyway, I think that that's a whole different topic. But as far as the impact, we have, they're going to do, call it 2 million vehicles, more or less. If you get to, just for easy math, 1 million robotaxis, a lot of those are going to be Tesla owned. They're actually going to own their own taxis. Some of them will go to third parties. But if you get to that million and assume about 3 rides per day, you effectively can double the operating income. Now, I was just talking about the importance of revenue, but I think that is the math. So that's about 10.
Yeah, you be a little careful with that, because you speculate on, well, what fleet are we using? Are we using our vehicles? Are we using new vehicles? There are different costs to that. Are we sharing the revenues with people who bought the car? What are the wait times going to be? How many of them are going to be available? Like, there's a lot of assumptions on that. You know, I try to use a percentage of Uber. You know, I understand that's an assumption too, but that gets a little tough.
Stan, I'm going to give you the final word here as Tesla shares up 8% on the back of this crummy report.
Yeah, I think it's going lower. I mean, listen, if you're buying this thing for robo-taxis in 2 or 3 years, push that expectation out. And then the other thing is, Uber and Lyft, we spent the last 5 years litigating the fact those companies can't own the cars. It's a disaster. If you think the unit economics suck already on rideshare, have the companies own the car.
That's a financial term, by the way. That's a financial term.
But I'm sorry.
Quick note, I did just get an update that inventory for Tesla did rise to 28 days from 15 days last quarter. So this is a pretty big jump for inventory. So not so great on that inventory side. There's always that risk that we're still going to need more price reductions. Although even in the face of all the price reductions we've had, that margin's been holding up. So good for them.
I believe that's a good business.
He's an evangelist, you're not. I get it. Meanwhile, stocks continuing their rebound during the regular session, with the Nasdaq leading the gains up over 1.5%. The S&P also rising for a second straight day, while the Dow is now up 4 days in a row. JP Morgan CEO Jamie Dimon speaking at the Economic Club of New York.
Yeah, he was a little bearish on stagflation. Okay, we've got 13 minutes left to go before the earnings call. Let's add a couple things in over here. So now that we've watched this, I want to right down here, I want to say, I'm going to put in price cuts represent COGS decline. So that's basically just a way of saying when we cut prices, it's because costs are coming down. That would be a popular thing to say. I think that would be very good to say. I think that, look at that, the negative 500 mil in free cash flow. Well, that was right. But we could kill that. We could probably talk about, I really want to hear them talk about like Blackwell, like next gen AI. And then is the robo-taxi dedicated or user owned, right? Like I think that would be interesting, though we might not end up getting that. So, yeah, you know, this, I think this is going to be interesting. So we'll see what we get on our bingo card here. Right now, the stock is moving up about 8%. It's kind of stable around 8% here. And then we've got about 5.6 down on end phase. It does look like, let's go ahead and see if we can get a little bit more on end phase. They're talking about maybe bottoming out this quarter. Kind of tough. Entering a growth cycle. They think the California markets are going to rebound by the second half of 2024. Q1's the bottom of the market. I mean, I feel like we've heard this stuff before. I wonder if Enphase did any buybacks, because Enphase has a lot of buybacks authorized. And if they didn't do buybacks, then I feel like that sort of signals that maybe the bottom isn't in. And if they did a lot of buybacks, then maybe that's right. So if I look at their financial results quickly, so let's just see if we have back. No. Buy. Share. No. Oh, there it is. Yep. In the first quarter of 2024, we repurchased 332,000 shares for a total of 42 million. Yeah, but that's nominal because they authorized $1 billion. So, not great. Not great. Okay. All right. That's interesting. So somebody here says, why would they cancel the discounts on used car inventories? I don't think they are. I think they're moving to more of a sort of like financing discount model. Lyft down 3%, Uber down 1.5%. I think I do think the robo-taxi discussion is somewhat premature, but maybe I'm wrong about that. You know, I think that's a little, oh, I need a bingo stamp. Yeah, house hack logo, let's go. Tesla semi-factory started. No, I didn't see any of that. I did not see that. Somebody here is saying they're going to switch from X to YouTube so you could watch and do other things on your phone. I think you have picture-in-picture on Twitter too, X. So, interesting. Okay, good. So, interesting take there on end phase. I'll have to go through deep into detail, some analysis there on end phase. But inventory rising. We're going to be looking for clues. So what are we looking for? These clues on newer, cheaper models. Oh, no. It's just one car. That's not great. Oh, okay. Somebody posted about the semi-factory starting. Let me see here, because I didn't see a comment on that. And we can look, though, here in the actual earnings call, or sorry, presentation. Tesla semi-factory startup can start. Oh, yeah. Okay. Near Giga Nevada. Yeah. This is grading. This is land grading. This is, we've seen stuff like this in Mexico, and they slow walk this stuff. Like, this is in the presentation, but I expect this will be slow walked. Like, I hate to be like that guy, but I'm bullish about a lot of things that I heard here. This is bullshit. Not only do I think this will be slow walked, but I don't think they have really the capital that they want to spend on this right now, especially the battery capacity. So I understand it's in Nevada, which is great, where you're doing your battery cap, but I think this is quick, grade the lot, so it looks like we're growing to shareholders. Okay, like, I know this is extremely jaded. I am sorry, okay? I said a lot of bullish things here, but, you know, this is kind of a joke. I mean, we got, like, that's not even enough piping here to get, like, across this field once. It's probably just leftover material. I've got 4 or 5 grading machines, which could be there for a day. You take a beautiful picture, call it a day. One of the reasons you want to grade, by the way, while you do this, is you don't want all the weeds to come through and, like, everything to look like trash. because then everybody's going to be pissed at you. It's going to make the company look like you're failing. So this, I hate to say it, I think this is clickbait. So we'll see. Maybe I'm wrong. I think that's clickbait. That is my observation there. Oh, the resolution just went to poopy. Sorry. It'll come back in just a second. I could also just restart really quickly here. I'm just gonna refresh really quick. Stand by 1 second. Let's make sure we can do this fine. 1 sec. There we go. That should be substantially better. Sometimes it does that. That's just how it is. Anyway, puts on Kevin's ISP. Thank you for that. So we've got the earnings call coming up soon. Way better. Very good. Again, Tesla stock right now is up about 8.25%. We are rising. We are also expecting the earnings call to begin in just a few moments, so we'll go ahead and have that ready. Let's listen in here for a moment. Texas Instruments, let's see what they say here.
Well, it hasn't, and if you think about where we were kind of right in the middle of a lot of supply chain dynamics, especially with autos, especially around chips. I mean, this was a nightmare for the auto space. Part of that, I think, is where just Texan really lost that period. It's obviously not at all giving you any of the AI boom. It's a company that I think trades more like a commodity, and it actually is as cyclical as chips often is. This one is that.
Interesting stuff. Meanwhile, Visa moving higher after reporting a top and bottom line beat after the bell. Let's go to Kate Rooney for those details. Hi, Kate. What are you seeing?
Hey there. Yeah, Court. So Visa is really shrugging off any concerns about the slowing economy and inflation. The beat was driven by strong payments growth. CEO Ryan McInerney calling it stable consumer spending. Consumers looking good, according to Visa. Also reiterating its guidance, looking for low double-digit revenue.
All right. So some other things that we're going to note are that the earnings call begins in about 4.5 minutes. So we're going to cover the earnings call. Of course, I'll take notes during the earnings call. Generally, I try to be relatively quiet during the calls so that we could actually listen. But the Tesla earnings call will be coming up. We'll be flowing that. The semi-factory grading. I know they did call it the start of construction. It is a form of start of construction, but I think that's mostly clickbait. And then, of course, we have this idea about Tesla inventories moving up from 15 days last Q to 28 days this Q. So there's something else to pay attention to. But again, I'm not as bearish as some of these folks here on mainstream that we've been listening to. I'm seeing a lot of bearishness. Very interested to see what ends up happening with Elon's earnings call here. So that is expected to begin in just about 3.5 minutes now, and so we'll be covering that in detail. You do have Enphase down about 5.25%. Right now we are looking at NASDAQ futures green, though actual futures won't actually open in about 30 minutes. So this is more like post-market trading as green. Jump in on over here, and you can see Bitcoin. It did drop from about 67K today. So we did see a little bit of pain over here on BTC coming down. I also have some good news to share. I talked to somebody special today about Summer. In case you don't know, this here is a picture of Violet, which is Summer's identical twin. And they've been separated since birth because Summer's gone through 3 pretty major surgery, well, 2 major surgeries and 1 not so major surgery. And she's recovering so well that we got a call from a discharge nurse today. So we're really excited about that. We don't have a date yet, but it's pretty emotional for us. So it's also very exciting. So we're getting closer to her finally coming home, which is nice. So, all right, let's listen in here. We got about 3 minutes to go.
Look at the services side of our economy, this is a place where I think people are starting to get some concern.
Well, coming up, lacking in luxury, Gucci's parent company expecting a sharp drop in one key metric. This is China demand falls short. More on how Gucci dropped the bag. That's coming up next. Plus, Goldman Sachs setting a record close as the stock continues its climb after earnings last week. So will the bank bump continue? We'll debate that ahead. You're watching Fast Money live from the NASDAQ market site in New York City's Times Square. We're back right after this.
All right. So we are, again, just waiting for this earnings call to begin. That is expected to begin any moment now. We're on standby for it. So I've already got it up, technically playing, but it's in the background. Yeah. Oh, yeah. can kind of hear that Tesla music there in the background, but we won't play that so we don't get demonetized here. And then we've got Visa saying consumer spending has remained relatively stable. This coming through the wire right now on Visa. It's actually pretty good news. What we don't want to see is a collapse of consumer spending. This is really the week that I really want to gauge what is actually happening with consumers. Are we going to be okay in this economy? So that's frankly what I'm really curious about, and this week is the answer to that. From advertising to autos to artificial intelligence to Facebook, Microsoft, Tesla, you name it. So very, very good. Love to hear that Visa is saying that consumer spending is relatively stable. International payment volume stable. We've got the travel recovery though has been a little slower than expected. So some puts and calls, as we like to say, puts and takes, some others say. Anyway, now we're going into this call up about 8.2%. So let's see what we get from Elon as we get ready here for the earnings call to begin. And let's go ahead and start with a little bit of preparation music. Y'all ready? All right, they're usually late by a minute or so here, so I'm not going to play that for that entire time, but we'll just keep listening here. Yeah, still got the sort of techno jazz going on here as we wait for those earnings to begin. Again, I'll take notes and we'll add some coverage as that becomes important. We've got the stock. We can go ahead and pull up the Windows computer, dropping now a little bit, but it's been pretty well fluctuating around this 8%. Not a surprise to maybe see a little bit of trading going right into the earnings call here. Waiting for that call to begin now.
My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So to recap, in Q1, we navigated several unforeseen challenges as well as the ramp for the updated Model 3 in Fremont. There was, as people have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market. Despite these challenges, the Tesla team did a great job executing in a tough environment, and energy storage deployments, the Megapack in particular, reached an all-time high in Q1, leading to record profitability for the energy business. And that looks likely to continue to increase in the quarters and years ahead. It will increase. We actually know that it will. Significantly faster than the car business, as we expected. We also continue to expand our AI training capacity in Q1, more than doubling our training compute sequentially. In terms of the new product roadmap, there's been a lot of talk about our upcoming vehicle line in the past several weeks.
Here we go.
We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line. It'll be made on our current production lines much more efficiently. And we think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. Regarding FSD version 12, which is the pure AI-based self-driving, people that if you haven't experienced this, I strongly urge you to try it out. It's profound, and the rate of improvement is rapid. So we've now turned that on for all cars with the cameras and inference computer and everything from hardware 3 on in North America. So it's been pushed out to I think around 1.8 million vehicles, and we're seeing about half of people use it so far, and that
wow.
percentage is increasing with each passing week.
900K.
So we now have over 300 billion miles that have been driven with FSD V12. Since the launch of full self-driving, supervised full self-driving, it's become very clear that the vision-based approach with end-to-end neural networks is the right solution for scalable autonomy. And it's really how humans drive. Our entire road network is designed for biological neural nets and eyes. So naturally, cameras and digital neural nets are the solution to our current road system. To make it more accessible, we've reduced the subscription price to $99 a month, so it's easy to try out. And as we've announced, we'll be showcasing our purpose-built robotaxi or cybercab in August. Regarding AI compute, over the past few months, we've been actively working on expanding Tesla's core AI infrastructure. For a while there, we were training constrained in our progress. We are, at this point, no longer training constrained, and so we're making rapid progress. We've installed and commissioned, meaning they're actually working, 35,000 H100 computers, or GPUs. GPU is the wrong word. They need a new word. I always feel like a wince when I say GPU, because it's not GPU, G stands for graphics, and it doesn't do graphics. But anyway, roughly 35,000 H100s are active, and we expect that to be probably 85,000 or thereabouts by the end of this year. In training, just for training. We are making sure that we're being as efficient as possible in our training. It's not just about the number of H100s, but how efficiently they're used. So in conclusion, we're super excited about our autonomy roadmap. I think it should be obvious to anyone who's driving version 12 in a Tesla that it is only a matter of time before we exceed the reliability of humans, and not much time at that. And we're really headed for an electric vehicle, an autonomous future. And I'll go back to something I said several years ago, that in the future, gasoline cars that are not autonomous will be like riding a horse and using a flip phone. And that will become very obvious in hindsight. We continue to make the necessary investments that will drive growth and profits for Tesla in the future. And I wanted to thank the Tesla team for incredible execution during this period, and look forward to everything that we have planned ahead. Thanks.
Thank you very much. And Vaibhav has some comments as well.
Thanks. It's important to acknowledge what Elon said. From our auto business perspective, we did see a decline in revenues quarter over quarter, and those were primarily because of seasonality, uncertain macroeconomic environment, and the other reasons which Elon had mentioned earlier. Auto margins declined from 18.9 to 18.5%, excluding the impact of Cybertruck. The impact of pricing actions was largely offset by reductions in per unit costs and the recognition of revenue from Autopark feature for certain vehicles in the US that previously did not have that functionality. Additionally, while we did experience higher costs due to the ramp of Model 3 in Fremont and disruptions in Berlin, these costs were largely offset by cost reduction initiatives. In fact, if we exclude Cybertruck and Fremont Model 3 RAM costs, the revenue from auto margins improved slightly. Currently, normalized Model Y cost per vehicle in Austin and Berlin are already very close to that of Fremont. Our ability to reduce costs without sacrificing on quality was due to the amazing efforts of the team in executing Tesla's relentless pursuit of efficiency across the business. We've also witnessed that as other OEMs are pulling back on their investments in EV, there is increasing appetite for credits, and that means a steady stream of revenue for us. Obviously, seeing others pull back from EV is not the future we want. We would prefer it the whole industry went all in. On the demand front, we have undertaken a variety of initiatives, including lowering the price of both the purchase and subscription options for FSD, launching extremely attractive leasing specials for the Model 3 in the US for $299 a month, and offering attractive financing options in certain markets. We believe that our awareness activities paired with attractive financing will go a long way in expanding our reach and driving demand for our products. Our energy business continues to make meaningful progress with margins reaching a record of 24.6%. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. And accordingly, this business will begin contributing significantly to our overall profitability. Note that there is a bit of lumpiness in our storage deployments due to a variety of factors that are outside of our control, so deployments may fluctuate quarter over quarter. On the operating expense front, we saw a sequential increase from our AI initiatives, continued investment in future projects, marketing, and other activities. We had negative free cash flow of $2.5 billion in the first quarter. The primary driver of this was an increase in inventory from a mismatch between builds and deliveries, as discussed before, and our elevated spend on CapEx across various initiatives, including AI compute. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. As we prepare the company for the next phase of growth, we had to make the hard but necessary decision to reduce our headcount by over 10%. The savings generated are expected to be well in excess of $1 billion on an annual run rate basis. We are also getting hyper-focused on CapEx efficiency and utilizing our installed capacity in a more efficient manner. The savings from these initiatives, including our cost reductions, will help improve our overall profitability and ultimately enable us to increase the scale of our investments in AI. In conclusion, the future is extremely bright, and the journey to get there, while challenging, will be extremely rewarding. Once again, I would like to thank the whole Tesla team for delivering great results, and we can open it up to Q&A.
Thank you. Okay, let's start with investor Q&A. The first question is, what is the status of 4680? What is the current output? Lars?
Sure. 4680 production increased about 18-20% from Q4, reaching greater than 1K a week for Cybertruck, which is about 7 gigawatt hours per year, as we posted on X. We expect to stay ahead of the Cybertruck ramp with the cell production throughout Q2 as we ramp the 3rd of 4 lines in phase 1, while maintaining multiple weeks of cell inventory to make sure we're ahead of the ramp. Because we're ramping, COGS continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So our goal, and we expect to do this, is to beat supplier costs of nickel-based cells by the end of the year.
Thank you. The second question is on Optimus. So what is the current status of Optimus? Are they currently performing any?
They're moving fast.
When do you expect to start mass production?
We are able to do simple factory tasks, or at least I should say factory tasks in the lab. In terms of actually, we do think we will have Optimus in limited production in the factory, in the actual factory itself, doing useful tasks before the end of this year. So
nice.
And then I think we may be able to sell it externally by the end of next year. These are just guesses. as I've said before, I think Optimus will be more valuable than everything else combined. Because if you've got a sentient humanoid robot that is able to navigate reality and do tasks at request, there is no meaningful limit to the size of the economy. So that's what's going to happen. And I think Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. This perhaps is a point that is worth emphasizing. Tesla's AI inference efficiency is vastly better than any other company. No, there's no company even close to the inference efficiency of Tesla. We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. But that will pay dividends in many ways.
Thank you. The third question is, what is Tesla's current assessment of the pathway towards regulatory approval for unsupervised FSD in the US?
Ooh,
and how
big
should
one.
we think about the appropriate safety threshold compared to human drivers?
Regulators should love us.
Sure. I can start. There are a handful of states that already have adopted autonomous vehicle laws. These states are paving the way for operations, while the data for such operations guides a broader adoption of driverless vehicles. I think Ashok can talk a little bit about our safety methodology, but we expect that these states and the work ongoing, as well as the data that we're providing, will pave a way for a broad-based regulatory approval in the U.S. at least, and then other countries as well.
Yeah.
Fair.
It's actually been pretty helpful that other autonomous car companies have been cutting a path through the regulatory jungle. That's actually quite helpful. And they have obviously been operating in San Francisco for a while. I think they got approval for City of LA. So these approvals are happening rapidly. I think if you've got at scale a statistically significant amount of data that shows conclusively that the autonomous car has, let's say, half the accident rate of a human-driven car, I think that's difficult to ignore, because at that point, stopping autonomy means killing people. So I actually do not think that there will be significant regulatory barriers, provided there is conclusive data that the autonomous car is safer than a human-driven car. And in my view, this will be much like elevators. Elevators used to be operated by a guy with a relay switch, but sometimes that guy would get tired or drunk or just make a mistake and shear somebody in half between floors. So now we just get in an elevator and press a button. We don't think about it. In fact, it's kind of weird if somebody's standing there with a relay switch. That'll be how cars work. You just summon a car using your phone. You get in, it takes you to a destination, you get out.
You don't even think about it.
You don't even think about it. Just like an
comparison.
It takes
Totally
you to your floor. That's it. Don't think about how the elevator is working or anything like that. Something I should clarify is that Tesla will be operating the fleet.
There it is.
So you can think of like how Tesla, think of Tesla like, I don't know, some combination of Airbnb and Uber, meaning that, there'll be some number of cars that Tesla owns itself and operates in the fleet. There'll be some number of cars, and then there'll be a bunch of cars where they're owned by the end user, but that end user can add or subtract their car to the fleet whenever they want. And they can decide if they want to only let the car be used by friends and family, or only by 5-star users, or by anyone. At any time, they could have the car come back to them and be exclusively theirs, like an Airbnb. You could rent out your guest room or not anytime you want. So
nice.
As our fleet grows, we have 7 million cars, 9 million cars, eventually tens of millions of cars. worldwide. With a constant feedback loop, every time something goes wrong, that gets added to the training data, and you get this training flywheel happening in the same way that Google search has the sort of flywheel. It's very difficult to compete with Google because people are constantly doing searches and clicking, and Google's getting that feedback loop. It's the same with Tesla, but at a scale that is maybe difficult to comprehend, but ultimately be tens of millions. I think there's also some potential here for an AWS element down the road, where if we've got very powerful inference, because we've got a hardware 3 in the cars, but now all cars are being made with hardware 4. Hardware 5 is pretty much designed and should be in cars hopefully towards the end of next year. And there's a potential to have to run when the car is not moving to actually run distributed inference. So
server, rent it out like a server.
US, but distributed inference. Like, it takes a lot of computers to train an AI model, but many orders of magnitude less compute to run it. So if you can imagine a future perhaps where there's a fleet of 100 million Teslas, and on average they've got like maybe a kilowatt of inference compute, that's 100 gigawatts of inference compute distributed all around the world. It's pretty hard to put together 100 gigawatts of AI compute. And even in an autonomous future where the car is perhaps used, instead of being used 10 hours a week, is used 50 hours a week, that still leaves over 100 hours a week where the car inference computer could be doing something else. And it seems like it would be a waste not to use it.
Actually, do you want to chime in on your process and safety?
Yeah, we have like multiple tiers of validating the safety. For like in any given week, we train hundreds of neural networks that can produce different trajectories for how to drive the car. We replay them through the millions of clips that we have already collected from our users and our own QA. Those are like critical events, like someone jumping out in front, or like other critical events that we have gathered a database over many, many years. And we replay through all of them to make sure that we are net improving safety. And on top of it, we have simulation systems that also try to recreate this and test this in closed loop fashion. Once all of this is validated, we give it to our own QA drivers. We have hundreds of them in different cities, in San Francisco, Los Angeles, Austin, New York, a lot of different locations. They are also driving this and collecting real world miles. And we have an estimate of what are the critical events. Are they a net improvement compared to the previous week's builds? And once we have confidence that the build is a net improvement, then we start shipping to early users, like 2,000 employees initially, that they would like get the build. They would give feedback on like if it's an improvement, or are they noticing some new issues that we did not capture in our own QA process. And only after all of this is validated, then we go to external customers. And even when we go external, we have like live dashboards of monitoring every critical event that's happening in the fleet, sorted by the criticality of it. So we are having a constant pulse on the build's quality and the safety improvement along the way. And then any failures, like Elon alluded to, you get the data back, add it to the training, and that improves the model in the next cycle. So we have this like constant feedback loop of issues, fixes, evaluations, and then rinse and repeat. And especially with the new V2 architecture, all of this is automatically improving without requiring much engineering interventions, in the sense that engineers don't have to be creative in like how they code the algorithms. It's mostly learning on its own based on data. So you see that, okay, we failed here, or like this is how a person shows, this is how you drive this intersection or something like that. We get the data back, we add it to the neural network, and it learns from that training data automatically, instead of some engineers saying that, oh, here you must rotate the steering wheel by this much or something like that. There's no hard if-else conditions. It's everything is neural network. It's very soft. It's probabilistic. So it will adapt its probability distribution based on the new data that it's getting.
Yeah, and we do have some insight into how good the things will be in, like, let's say 3 or 4 months, because we have advanced models that are far more capable than what is in the car, but have some issues with them that we need to fix. So there'll be a step change improvement in the capabilities of the car, but it'll have some quirks that are that need to be addressed in order to release it. As Ashok was saying, we have to be very careful in what we release to the fleet or to customers in general. So like if we look at say 12.4 and 12.5, which are really could arguably even be version 13, version 14, because it's pretty close to a total retrain of the neural nets in each case, or substantially different. So we have good insight into where the models, how well the car will perform in say 3 or 4 months.
Yeah. In terms of scaling laws, people in the AI community generally talk about model scaling laws, where they increase the model size a lot, and then they have corresponding gains in performance. But we have also figured out scaling laws in other axes. In addition to the model size scaling, we can also have data scaling. You can increase the amount of data you use to train the neural network, and that also gives similar gains. And you can also scale up by training compute. You can train it for much longer and get more GPUs or more Dojo nodes, and that also gives better performance. And you can also have architecture scaling, where you come up with better architectures that for the same amount of compute produce better results. So a combination of model size scaling, data scaling, training compute scaling, and the architecture scaling, we can basically if we continue scaling based on this ratio, we can sort of predict future performance. Obviously, it takes time to do the experiments because it takes few weeks to train. It takes a few weeks to collect tens of millions of video clips and process all of them. But you can estimate what's going to be the future progress based on the trends that we have seen in the past, and they've generally held true based on the past data.
Okay, thank you very much. Let's go to the next question, which is, can we get an official announcement of the timeline for the $25,000 vehicle?
Here we go.
I think Elon mentioned it in the opening remarks, but as you mentioned, we're updating our future vehicle lineup to accelerate the launch of our low-cost vehicles in a more CapEx efficient way. That's our mission, to get the most affordable cars to customers as fast as possible. These new vehicles will be built on our existing lines and open capacity, and that's a major shift, to utilize all our capacity with marginal CapEx before we go spend high CapEx to do anything.
Yeah, we'll talk about this more on August 8th. But really the way to think of Tesla is almost entirely in terms of solving autonomy and being able to turn on that autonomy for a gigantic fleet. And I think it might be the biggest asset value appreciation in history when that day happens, when you can do unsupervised full self-driving.
5 million cars.
Yeah.
Wow.
We've heard that before.
Well,
Some of those have
it'll be 7 million cars, in a year or so. And then 10 million, and then, eventually we're talking about tens of millions of cars. Not eventually, it's like before the end of this decade. Yeah, before the end of the decade, it's several tens of millions of cars, I think.
Thank you. The next question is, what is the progress of Cybertruck ramp?
I can take that one too. Cybertruck hit 1K a week just a couple weeks ago. This happened in the first 4 to 5 months since we SOP'd late last year. Of course, volume production is what matters. That's what drives costs, and so our costs are dropping. But the ramp still faces a lot of challenges with so many new technologies, some supplier limitations, et cetera, and we'll continue to ramp this year, just focusing on cost efficiency and quality.
Okay, thank you. The next question, have any of the legacy automakers contacted Tesla about possibly licensing FSD in the future?
Talk to, but no contracts, my guess.
We're in conversations with one major automaker regarding licensing FSD.
He says that every time.
The next question is about the robotaxi.
Every time.
Elon already talked about that, so we'll have to wait till August. The following question is about the next generation vehicle. We already talked about that. So let's go to the Semi. What is the timeline for scaling Semi? I think
sure. So we're finalizing the engineering of the Semi to enable a super cost-effective high-volume production with our learnings from our fleet and our pilot fleet and Pepsi's fleet. which we're expanding this year marginally. In parallel, as we showed in the shareholders deck, we have started construction on the factory in Reno. Our first vehicles are planned for late 2025 with external customers starting in 2026.
Okay, a couple more questions. So our favorite, can we make FSD transfer permanent until FSD is fully delivered with level 5 autonomy?
No.
Okay, next question. What is gating the production ramp at Lathrop? Where do you see the megapack run rate at the end of the year? Mike?
Yeah, Lathrop is ramping as planned. We have our second GA line allowing us to increase our exit rate from 20 gigawatt hours per year to, at the start of this year, to 40 gigawatt hours per year by the end of the year. That line is commissioned. There's really nothing limiting the ramp. It's given the longer sales cycles for these large projects, we typically have order visibility 12 to 24 months prior to ship dates. So we're able to plan the build plan several quarters in advance. So this allows us to ramp the factory to align with the business and order growth. Lastly, we'd like to thank our customers globally for their trust in Tesla as a partner for these incredible projects.
Okay, thank you very much. Let's go to analyst questions. The first question comes from Tony Sacconaghi from Bernstein. Tony, please go ahead and unmute.
Thank you for taking the question. I was just wondering if you could elaborate a little bit more on kind of the new vehicles that you talked about today. Are these like tweaks on existing models, given that they're going to be running on the same lines, or are these like new models, and how should we think about them, in the context of like the Model 3 Highland update? What will these models be like relative to that? And given the quick time frame, Model 3 Highland has required a lot of work and a lot of retooling. Maybe you can help put that all in context. Thank you.
Good question.
Have a follow-up, please.
I think we've said all we will on that front. What's your follow-up?
It's a more personal one for you, Elon, which is that you're leading many important companies right now. Maybe you can just talk about where your heart is at in terms of your interests, and do you expect to lessen your involvement with Tesla at any point over the next 3 years?
Well, Tesla constitutes the majority of my work time, and I work pretty much every day of the week. It's rare for me to take a Sunday afternoon off. I'm going to make sure Tesla is very prosperous, and I think it is prosperous, and it will be very much so in the future.
Okay, thank you. Let's go to Adam Jonas from Morgan Stanley. Adam, please go ahead and unmute.
Okay, great. Hey, Elon. So you and your team on volume expect a 2024 growth rate notably lower than that achieved in 2023. But what's your team's degree of confidence on growth above 0%? Or in other words, does that statement leave room for potentially lower sales year on year?
No, I think we'll have higher sales this year than last year.
Okay.
Good.
My follow-up, Elon, on future product. If you had nailed execution, assuming that you nail execution on your next gen, cheaper vehicles, more aggressive giga castings, I don't want to say one piece, but getting closer to one piece, structural pack, unboxed, 300-mile range, $25,000 price point, putting aside robotaxi, those features unique to you, how long would it take your best Chinese competitors to copy a cheaper and better vehicle that you could offer a couple years from now? How long would it take your best Chinese competitors to copy that? Thanks.
I mean, I don't know what our competitors could do, except we've done relatively better than they have. If you look at the drop in our competitors in China sales versus our drop in sales, our drop was less than theirs. So we're doing well. But I think Kathy would said it best. Like, really, we should be thought of as an AI robotics company. If you value Tesla as just like an auto company, you would just have to fundamentally. It's just the wrong framework, and it will come to be. If you ask the wrong question, then the right answer is impossible. So, I mean, if somebody doesn't believe Tesla's going to solve autonomy, I think they should not be an investor in the company. Like that is, but we will, and we are. And then you have a car that goes from 10 hours of use a week, like an hour and a half a day, to probably 50, but it costs the same.
I think that's the key thing to remember, right? Especially if you look at FSD supervised. If you didn't believe in autonomy, they should give you a preview that this is coming. It's actually getting better day by day.
Yeah, if you've not tried the FSD 12.3, and like I said, 12.4 is going to be significantly better, and 12.5 even better than that, and we have visibility into those things, then you really don't understand what's going on. It's not possible.
Yeah, and that's why we can't just look at just as a car company, because a car company would just have a car. But here we have more than a car company because the cars can be autonomous. And like I said, it's happening.
Yeah, this is all in addition to Tesla working. The overall AI community is just like improving rapidly.
Yeah. I mean, we're putting the actual auto in automobile. So, so sort of a lot of it be like, well, sort of like, tell us about future horse carriages you're making. I'm like, well, actually, it doesn't need a horse. That's the whole point. And that's really the whole point.
Okay, thank you. The next question comes from Alex Potter from Piper Sandler. Alex, please go ahead and unmute.
Great, thanks. So couldn't agree more. The thesis hinges completely on AI, the future of AI, full self-driving, neural net training, all of these things. In that context, Elon, you've spoken about your desire to obtain 25% voting control of the company. And I understand completely why that would be. So I'm not necessarily asking about that. I'm asking if you've come up with any mechanism by which you can ensure that you'll obtain that level of voting control. Because if not, then the core part of the thesis could potentially be at risk. So
this is big.
Additional commentary you might have on that topic?
Vote.
Well, I think no matter what, Tesla, even if I got kidnapped by aliens tomorrow, Tesla will solve autonomy, maybe a little slower, but it would solve autonomy for vehicles at least. I don't know if it would win with respect to Optimus or with respect to future products, but it would. That there's enough momentum for Tesla to solve autonomy, even if I disappeared for vehicles. Now, there's a whole range of things we can do in the future beyond that. I'd be more reticent with respect to Optimus. If we have a super sentient humanoid robot that can follow you indoors and that you can't escape, we're talking Terminator level risk, then I'd be uncomfortable with, if there's not some meaningful level of influence over how that is deployed. And
that's a risk.
If there's shareholders have an opportunity to ratify or re-ratify the sort of competition, I guess I can't say that. Whatever, but that is a fact. They have an opportunity.
Okay. Very good.
And we'll see if the company generates a lot of positive cash flow, we could obviously buy back shares.
All right, that's actually all very helpful context. Thank you. Maybe one final question, then I'll pass it on. OpEx reductions, thank you for quantifying the impact there. I'd be interested also in potentially more qualitative discussion of what the implications are for these headcount reductions. What are the types of activities that you're presumably sacrificing as a result of parting ways with these folks? Thanks very much.
Nothing.
So, like we said, we've done these headcount reductions across the board. And, as companies grow over time, there are certain redundancies, there's some duplication of efforts which happens in certain areas. So you need to go back and look at where all these pockets are, get rid of it. So we're basically going through that exercise wherein we're like, hey, how do we set this company right for the next phase of growth? And the way to think about it is, any tree which grows, it needs pruning. This is the pruning exercise which we went through. And at the end of it, we'll be much stronger and much more resilient to deal with the future, because the future is really bright. Like I said in my opening remarks, we just have to get through this period and get there.
Yeah, we're not giving up anything that it's significant that I'm aware of. So we've had a long period of prosperity from 2019 to now, and so if a company sort of organizationally is 5% wrong per year, that accumulates to 25-30% of inefficiency. We've made some corrections along the way, but it is time to reorganize the company for the next phase of growth. And you really need to reorganize it, just like a human. When we start off with one cell and become a zygote and blastocyst, and you start growing arms and legs, and then briefly you have a tail. And so.
But you shed the tail.
You shed the tail, hopefully, and then you're a baby, and you basically you have to be different. The organism, a company is kind of like a creature growing, and if you don't reorganize it for different phases of growth, it will fail. You can't have the same organizational structure if you're 10 cells versus 100 versus a million versus a billion versus a trillion. Where humans are like around 35 trillion cells. It doesn't feel like it feels like feel like one person, but you're basically a walking cell colony of roughly 35 trillion, depending on your body mass, and about 3 times that number in bacteria. So anyway, you've got to reorganize the company for a new phase of growth, or it will fail to achieve that growth.
Thank you. Let's go to Mark Delaney from Goldman Sachs. Mark, please go ahead and unmute.
Yes, good afternoon. Thanks very much for taking the question. The company had previously characterized potential FSD licensing discussions as in the early phase, and some OEMs had not really been believing in it. Can you elaborate on how much the licensing business opportunity you mentioned today has progressed? And is there anything Tesla needs to achieve with the technology in terms of product milestones in order to be successful at reaching a licensing agreement, in your view?
Well, I think it just needs to be obvious that our approach is the right approach. And I think
not there yet.
I think we're now with 12.3. If you just have the car drive you around, it is obvious that our solution, with a relatively low cost inference computer and standard cameras, can achieve self-driving. No LiDARs, no radars, no ultrasonics, nothing. Just
no heavy integration work for vehicle manufacturers.
Yeah, it's so it really just be a case of having them use the same cameras and inference computer and licensing our software.
Oof, they'd have to use the same cameras?
But it's once it becomes obvious that if you don't have this in a car, nobody wants your car. Yeah, it's like it's a smart car. I still remember back when Nokia was king of the hill.
Dominating the cell phone industry.
Yeah, crushing. And I saw them come out with a smartphone that was basically a brick with limited functionality. And then the iPhone and Android. But people still did not understand that all the phones are going to be that way. There's not going to be any flip phones. There'll be a niche product.
Or home phones.
Yeah, not even exactly. When was the last time you saw a home phone?
I have no idea.
Yeah.
In a hotel, sometimes in a hotel.
Yeah, the hotels have them. Yeah. So the people don't understand, all cars will need to be smart cars, or you will not sell this. The car will not. Nobody will buy it. Once that becomes obvious, I think licensing becomes not optional.
Becomes a method of survival.
Yeah, it's license it or nobody will buy your car.
I mean, one other thing which I'll add is in the conversations which we've had with some of these OEMs, I just want to also point out that they take a lot of time in their product life cycle.
Yeah.
They're talking about years before they will, put it in their product. We might have a licensing deal earlier than that, but it takes a while. So this is where the big difference between us and them is, right?
Yeah, I mean, really, a deal signed now would result in it being in a car in probably 3 years.
That would be early.
Yeah, that's like lightning, basically.
Wow.
So
that's being an eager OEM.
Yeah. So, I mean, I wouldn't be surprised if we do sign a deal. I think we're good chance we do sign a deal this year. Maybe more than one. But yeah, it would be probably 3 years before it's integrated with a car, even though all you need is cameras and our inference computer. So it's like not a massive design change.
Yeah, and again, just to clarify, it's not the work which we have to do, it's the work which they have to do, which will take the time.
Right, Mark, do you have a follow-up?
Yeah, very helpful. Thank you. My follow-up was to better understand Tesla's approach to pricing going forward. Previously, the company had said that the price reductions were driving incremental demand. With how affordable the cars have become, especially for vehicles that have access to IRA credits and some of the leasing offers that Tesla has in place, do you still see meaningful incremental price reductions as making sense from here for the existing products? And can the company meaningfully lower prices from here and also stay free cash flow positive on an annual basis with the current product set? Thanks.
Yeah, I think we can be free cash flow positive meaningfully. Yeah.
I think Vaibhav said it in his opening remarks. Like our cost down efforts, we basically were offsetting the price cuts.
That's what I was going to say.
Goal. Like we're trying to give it back to the customers.
Yeah, I mean, at the end of the day, like for any given company, if you sell a great product at a great price, if you have a great product at a great price, the sales will be excellent. That's true of any arena. So over time, we do need to keep making sure that that it's a great product at a great price, and moreover, that price is accessible to people. So it's not, you have to solve both the value for money and the fundamental affordability question. The fundamental affordability question is sometimes overlooked. If somebody's earning several $100,000 a year, they don't think of a car from a fundamental affordability standpoint. But for the vast majority of people are living paycheck to paycheck. So it actually makes a difference if the cost per month for lease or financing is $10 one way or the other. So it is important to keep improving the affordability and to keep, it's just like making the price more accessible. Yeah, exactly. Make the price more accessible, the value for money better, and to keep improving that over time.
But also to make kick-ass cars that people want to buy.
Yeah, it's got to be a great product at a great price, and the standards for what constitutes a great product at a great price keep increasing. So there's like you can't just be static. You have to keep making the car better, improving the price of it, improving the cost of production. And that's what we're doing.
Yeah, and in fact, like I said in my opening remarks also, like the updated Model 3 is a fantastic car. I don't think people fully even understand the amount of engineering effort which has gone, and Lars and team have actually put out videos explaining how much the car is different when it looks and feels different. Not only it looks and feels different, we've added so much value to it, but you can lease it for like as low as $299 a month.
Yeah. Without gas.
Yeah.
All right. The next question comes from George from Canaccord. George, please go and unmute.
Hi. Thank you for taking my question. First, could you please help us understand maybe some of the timing of launching FSD in additional geographies, including maybe clarifying your recent comment about China? Thank you.
Yep.
You mean like new markets? Yeah, we are. There are a bunch of markets where we don't currently sell cars that we should be selling cars in. We'll see some acceleration of that.
And FSD in new markets?
Yeah. So the thing about the end-to-end neural net based autonomy is that just like a human, it actually works pretty well without modification in almost any market. So we plan on, with the approval of the regulators, releasing it as a supervised autonomy system in any market where we can get regulatory approval for that, which we think includes China. So yeah, it's just like a human, you can go rent a car in a foreign country and you can drive pretty well. Obviously, if you live in that country, you'll drive better, and so we'll make the car drive better in these other countries with country-specific training. But it can drive quite well almost everywhere.
Yeah, the basics of driving are basically the same everywhere. Like a car is a car, traffic is a traffic light, road is the road. It's like,
yeah, it understands that it shouldn't hit things no matter where it is.
Exactly. There are some road rules that you need to follow. In China, you shouldn't cross over a solid line to do a lane change. US is a recommendation, I think. China, you get fined heavily if you do that. We have to do some adaptations, but it's mostly smaller adaptations, not like an entire change of stack or something like that.
All right, let's go.
Yeah. Hey, George, do you have a follow-up?
Yep. So my follow-up has to do with the first quarter deliveries, and I'm curious as to whether or not you feel that supply constraints that you mentioned throughout the release impacted the results, and maybe can you help us quantify that, and is that why you have some confidence in unit growth in 2024?
Yeah, I think we did cover this a little bit in the opening remarks too. Q1 had a lot of different things which were happening. Seasonality was a big one, continued pressure, pressure from the macroeconomic environment. We had attacks at our factory. We had Red Sea attacks. We're ramping Model 3. We're ramping Cybertruck. All these things are happening. I mean, it almost feels like a culmination of all those activities in a constrained period. And that gives us that confidence that, hey, we don't expect these things to recur.
Yeah, we think Q2 will be a lot better.
Yeah.
It's just one thing after another. Yeah. Our attacks are crazy.
Yeah, exactly. It's just, if you've got cars that are sitting on ships, they obviously cannot be delivered to people. And if you've got excess demand for Model 3 or Model Y in one market, but you don't have it there, it's an extremely complex logistics situation. So and I'd say also we did overcomplicate the sales process, which we've just in the past week or so have greatly simplified. So it became far too complex to buy a Tesla, whereas it should just be you can buy the car in under a minute. So we're getting back to the you can buy a Tesla in under a minute interface from what was quite complex.
Okay, thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Given the pursuit of Tesla really as a leader in AI for the physical world, and your comments around distributed inference, can you talk about what that approach is unlocking beyond what's happening in the vehicle right now?
So, do you want to say something?
Yeah, I can mention like the car, even when it's a full robotaxi, it's probably going to be used around 50 hours a week.
That's my guess. Like a third of the hours of the week.
Yeah. it could be more or less, but then there's certainly going to be some hours left for charging and cleaning and maintenance. In that world, it can do a lot of other workloads. Even right now, we are seeing, for example, these LLM companies have this like batch workloads where they send a bunch of documents, and those are run through pretty large neural networks. Take a lot of compute to chunk through those workloads. And now that we have already paid for this compute in these cars, it might be wise to use them and not let them be idle, be like buying a lot of expensive machinery and letting them be idle. Like, we don't want that. We'd want to use the compute as much as possible and close to like basically 100% of the time, make effective use of it.
That's why I think it's analogous to Amazon Web Services, where people didn't expect that AWS would be the most valuable part of Amazon when it started out as a bookstore. So that was on nobody's radar. But they found that they had excess compute because the compute needs would spike to extreme levels for brief periods of the year, and then they had idle compute for the rest of the year. So then what should they do with all that excess compute for the rest of the year? That's
monetize it.
Yeah, monetize it. So it seems like kind of a no-brainer to say, okay, if we've got millions and then tens of millions of vehicles out there where the computers are idle most of the time, that we might as well have them do something useful.
Yeah, exactly.
And then, I mean, if you get like to the 100 million vehicle level, which I think we will at some point get to, then, and you've got a kilowatt of usable compute, and maybe you're on hardware 6 or 7 by that time, then you really, I think you'd have on the order of 100 gigawatts of usable compute, which might be more than anyone, more than any company, probably more than any company.
Yeah, probably. Because it takes a lot of intelligence to drive the car anyway. And when it's not driving the car, you just put this intelligence to other uses, just solving scientific problems.
Just like a human.
Or answering dumb questions for someone else.
We've already learned a lot about deploying workloads to these compute nodes.
Yeah. And unlike laptops and our cell phones, it is totally under Tesla's control. So it's easier to distribute the workload across different nodes as opposed to, asking users for permission on their own cell phones would be very tedious.
Well, you just drain the battery on them.
Yeah, exactly. The battery is also limited.
So technically, I suppose like Apple would have the most amount of distributed compute, but you can't use it because you can't get you can't just run the phone at full power and drain the battery.
Yep.
So whereas for the car, even if you're a kilowatt level inference computer, which is crazy power compared to a phone, if you've got a 50 or 60 kilowatt hour pack, it's still not a big deal to run.
If you're plugged in,
whether you're plugged in or not, you could be plugged in or not plugged in. You could run for 10 hours and use 10 kilowatt hours of your kilowatt of compute.
Forever.
Yeah.
Working on
Come on, baby.
liquid cold thermal management.
Yeah,
I gotta go.
Expensive for data centers, so it's already there in the car.
Exactly. So it's distributed power generation. It's just distributed access to power and distributed cooling, and it's already paid for.
Yeah, I mean that distributed power and cooling, people underestimate that costs a lot of money.
Really big deal.
Yeah, it does.
Yeah, and the capex is shared by the entire world.
Yes.
Sort of everyone owns a small chunk, and they get a small profit out of it, maybe.
Yeah.
Thanks so much, guys. And just my follow-up is a little bit more mundane. Looking at the 4680 ramp, can you talk about how close you are to target yields and when you might start to accelerate incremental capacity expansions on that technology?
We're making good progress on that, but I don't think it's super important for at least the near term. As Laura said, we think it'll be, exceed the competitiveness of suppliers by the end of this year, and then we'll continue to improve it.
Yeah, I mean, I think it's important to note also that the ramp right now is relevant to the Cybertruck ramp.
Yeah.
And so we're not going to just randomly build 4680s unless we have a place to put them. And so we're going to, make sure we're prudent about that. But we also have a lot of investments with all our cell suppliers and vendors. They're great partners, and they, doing great development work with us. And a lot of the advancements in technology and chemistry we found 4680, they're also putting into their cells.
Yeah, I mean, a big part of the 4680, or Tesla doing internal cells, was a hedge against what would happen with our suppliers. Because for a while there, it was very difficult because every big car maker put in massive battery orders. And so the price per kilowatt hour of lithium-ion batteries went to crazy numbers, to crazy levels.
Bonkers.
Yeah, just bonkers. So, like, okay, we've got to have some hedge here to deal with, cost per kilowatt hours numbers that were double what we anticipated. If we have an internal cell production, then we have that hedge against demand shocks, with too much demand. That's really the way to think about it. It's not like we want to take on a whole bunch of problems that just for the hell of it. We did the cell program in order to address the crazy increase in cost per kilowatt hour from our suppliers due to gigantic orders placed by every car maker on Earth. So.
Okay, thank you. And the last question comes from Ben Kalo from Baird. Ben?
I'll do a full summary.
Mute.
Got on mute.
And you're still muted.
Jesus.
Well, I once again would just like to strongly recommend that anyone who is, I guess, thinking about the Tesla stock should really drive FSD 12.3. You can't, it's impossible to understand the company if you do not do this.
All right, so since Ben is not unmuting, let's try Shreyas Patel from Wolf Research. Final question.
Come on.
Oh, hey. Thanks so much. Elon, during the Investor Day last year, you mentioned that auto COGS per unit for the next-gen vehicle would decline by 50% versus the current 3 and Y. I think that was implying something around $20,000 of COGS. About a third of that was coming from the unboxed manufacturing process. But I'm curious if you see an opportunity that some of the other drivers around powertrain cost reduction or material cost savings, would those be largely transferable to some of the new products that you're now talking about introducing?
Yeah, sure. I mean, in short, yes. I mean, the unboxed manufacturing method is certainly great and revolutionary, but with it comes some risk because, it's new production lines, not. But all the subsystems we developed, whether it was powertrains, drive units, battery improvements in manufacturing and automation, thermal systems, seating, the integration of interior components, and reduction of LV controllers, all that's transferable, and that's what we're doing. Trying to get it in their products as fast as possible. And so that engineering work, we're not trying to just throw it away and put it, in a coffin. We're going to take it and utilize it and
all right,
utilize it to the best advantage of the cars we make and the future cars we make.
Okay, great. And then just on that topic of 4680 cells, I know you mentioned it. You really thought of it more as like a hedge against rising battery costs from other OEMs, but it seems even today, it seems like you would have a cost advantage against some of those other automakers. And I'm wondering, given the rationalizing of your vehicle manufacturing plans that you're talking about now, if there's an opportunity to maybe convert the 4680 cells and maybe sell those to other automakers and really generate an additional revenue stream.
It's not
I'm just
profitable.
curious if you have any thoughts about that.
Structural battery, no way.
Right. What seems to be happening is that unless I'm missing something, the orders for batteries from other automakers have declined dramatically.
Yeah, that's it.
So we're seeing much more competitive prices for cells from our suppliers, dramatically more competitive than in the past. It is clear that a lot of our suppliers have excess capacity.
Yeah. In addition to what Elon said, this is Connor, by the way. In addition to what Elon said about 4680s, what 4680 did for us from a supply chain perspective was help us understand the supply chain that's upstream of our cell suppliers. So a lot of the deals that we had struck for 4680, we can also supply those materials to our partners, help reducing the overall cost back to Tesla. So we're basically inserting ourselves in the upstream supply chain by doing that. So that's also been beneficial in reducing the overall pricing, in addition to the excess capacity that these suppliers have.
Yeah, now, I mean, this is going to wax and wane, obviously. So, there's going to be a boom and bust in battery cell production, where production exceeds supply, and then supply exceeds production, and back and forth, kind of like, I don't know, DRAM or something.
Ooh.
But, so it's like what is true today will not be true in the future. There's going to be somewhat of a boom and bust cycle here. And then there are additional complications with government incentives, like the Inflation Reduction Act, the IRA, which I always found like a funny name for a
comical name.
Yeah, is it like the Irish Republican Army? The Internet Research Agency from Russia?
Independent retirement account?
Yeah, exactly. Roth IRA? And it's like four Spider-Man situations, which IRA wins. But it does complicate the incentive structure, so that there is perhaps there's stronger demand for cells that are produced in the U.S. than outside the U.S. But then how long does the IRA last? I don't know.
Which is why it's important that we have both in-house cells and vendor cells to hedge against all of this.
Yeah.
Okay, thank you very much. That's all the time we have today.
Okay, perfect. We're going to do a full summary here. Keep in mind, next expiration of the coupon code, April 30th. And I'm about to jump out of the door because I got to go to the House Hack Roadshow, which begins now. 8 days of Roadshow for House Hack. Learn more at househack.com/2024. You can meet me in person. All right, here we go. Let's go do a summary. This is, I think, a very important summary, and I'll give you my thoughts and theses on all of this. So let's get right into it, okay? Here we go. All right, the earnings call gave us some color that I don't think was as great as the color that I wanted to hear, especially off of the backs of, honestly, what was a really good overall earnings report. I know people are bagging on adjusted EPS and the revenue numbers. I get that, but I actually really liked the press release and what they did way better than the earnings call. I'm going to tell you why I didn't like this earnings call, and I'm just going to be transparent here, and I want to be clear. I was pretty bullish coming out of that earnings, like the earnings report. I'm like, oh, okay, all right. And Elon Musk is being fair. He's like, look, if you don't believe in AI, don't buy the stock. And I'm like, no, I believe, I must own the stock. But then I heard a few things that I didn't really like, and I'm gonna have to put some thought into these three things because these are problematic. Number one, we just heard that the 4680, probably honestly much like Dojo, isn't actually that revolutionary product that maybe we thought it was. Bloomberg Intelligence just put together quite a bit of information about how the 4680 is much less efficient in terms of battery density and its cost effectiveness than Tesla thought or advertised it would be on their initial battery day when they released that. And now I'm hearing Elon Musk and the team basically say, well, batteries are kind of like memory cards. They get really expensive and they get really cheap, and now nobody else is really ordering batteries, so we could just order batteries pretty cheaply from China, and we could just use the lithium ion phosphate batteries. Why do we really need to make our own? We're really only doing the 4680s, A, for the Cybertruck, which is, low volume production, and B, as a hedge. Okay, well, that's the same thing we heard them say about Dojo. They were building out Dojo because they needed to, not because they wanted to. And remember that pessimism we had from Elon about Dojo? I think we just got that same Dojo pessimism about the 4680s. And I don't like that. It's kind of like every time we have a different idea, like, here's Dojo. NVIDIA's just better. Here's 4680. It's just a hedge. I don't know. That didn't really jive well with me. I didn't like that. One. And number two, stock comp is actually an issue. Elon Musk just bluntly told us, hey, look, even if I get abducted by aliens and I disappear, in other words, I don't work at Tesla anymore, we'll still solve autonomy. Now, when it comes to Optimus, when it may be becoming a Terminator, and if I'm not here and I don't have the control, I don't know. Keep in mind that earlier in the call he says, hey, I think Optimus is going to be more valuable than the entire business put together of everything else we have. And he kind of just implied if he's not around, he ain't going to be going all in on Optimus at Tesla. Maybe it's, Optimus, I don't know, company or whatever somewhere else, or they just create a new robot company somewhere else. I don't know. That is a little bit what he just alluded to. I didn't love that. And I'm not saying don't pay the man what he was promised. I'm not here to talk about that. We've talked about that in other videos before. Watch those. I'm just saying that is a red flag. That's something that we're going to have to contend with as investors. And then we're starting to finally understand maybe a little bit more where Reuters is coming from. Some of the ultra bulls are saying, see, Reuters is lying again. Tesla is deciding to come out with more affordable vehicles. Well, obviously, as expected, we didn't get any kind of product roadmap announcement here. Are we getting a two-door? Are we getting a compact? Are we getting a van? What are we getting? We didn't really get any of that here. We didn't expect that here. But when the team was specifically asked, hey, are you just going to do like refreshes, or are you doing totally new models, or are you just going to lower prices and make your existing fleet more affordable as your costs come down, which obviously costs were coming down. Well, we covered that all in the other video. Those were great. Margins great. The idea about getting up to 3 million deliveries in this earnings call, Elon actually went above that. The press release said, hey, we want to get close to 3 million vehicles, and Elon's like, we're going to get to more than 3 million vehicles. Who knows? Maybe they're just not on the same page, and Elon's like, we're going to start doing this maybe even at the end of 2024 or early 2025. But then when pressed on what, we kind of just got this idea of, well, we're going to take some efficiencies of the new design of a manufacturing line. We'll implement those into new and existing vehicles, but we didn't get color on what are they really new vehicles or are they just refreshes? I thought that was a good question from an analyst. I do think there'll be a new-ish vehicle, but we just didn't get clarity on that. So that was another sort of negative. Now, there was another negative as well, and we'll talk about that in just a moment, but I don't want to be too negative here, so I want to just get some positivity going again. So we talked about queued quarter-over-quarter declines and negative free cash flow maybe being because of seasonality and just bad timing. And if you remove the Cybertruck from margin, you actually had margin at 18.5%. That's actually fan-frickin-tastic. The numbers that I'm running are about an 18% margin, and things get bullish if I run up to a 20% margin again. So if we can take out Cybertruck and get to 18.5% margins with tax credits, which Tesla is taking more of since the other manufacturers have dipped, I'm kind of optimistic about that. That was really good. I like that. So that was very good. They're obviously making the cars more affordable by coming out with attractive financing and leasing. They believe they're going to spend about $1 billion a year on artificial intelligence, so their CapEx spend is still going to be up there. We did have some talk about the Optimus being able to do some basic tasks in their lab right now, and maybe they can sell them externally by the end of the year. That was good. That was hope. Maybe some limited production by the end of this year. That's cool. Of course, talking about how valuable Optimus would be in the long term. As far as FSD and robotaxi, did get some clarity that some states already have approved robotaxi sort of networks thanks to Waymo and Cruise, and that makes it easier for Tesla to sort of get into those markets and get started. So they actually think regulatory approval really won't be an issue, especially since they'll be able to prove that robotaxis are safer. I agree with them. They also gave us a little bit of color that Tesla will be able to operate the fleet, so Tesla will take sort of control of the fleet, and you could submit your car to that fleet to only allow 5-star users, only allow friends and family, or determine when you want the car back, so it's kind of like Airbnb-ing your car. And there was even talk about maybe using these cars and eventually Hardware 5 compute technology to train inference, calculations based, well, not train and inference are the opposite basically, right? One leads to the other. But, so not train, but to conduct inference operations in a distributed manner to basically help functions like GPT run, ChatGPT, right? Run using the car's computers when they're not operating. Kind of interesting. I don't know if that's just smoke and mirrors, but Elon suggests this would kind of be like having a distributed AWS from Amazon. And remember, they used to be a book company, and now AWS is like the core of the business, right? At least the core of the profit center, that's for sure. So these were all really cool. Now, we did hear about this idea about maybe licensing to another OEM, and we got some clarity on how long that would take. First of all, we've heard this story before. We've heard that they're in talks about OEM licensing before. This is the other negative. This is the Q2 earnings call from 2023, where they say, look, full self-driving, here it is, and we are already in early discussions with, a major original equipment manufacturer about using Tesla FSD. We're not trying to keep this to ourselves. So they're pretty clear here, like they've said this before. This is the same thing we heard last year, except this time we did hear that even if somebody did sign a licensing agreement now, which they need to be convinced first to use the Tesla FSD, which they sort of implied people aren't yet, but they will be, or hopefully will be, then it would take about 3 years to actually get Tesla software operating in other vehicles, like a Ford or something else. I thought that was pretty interesting. Now, something else that I have to say, this was by far one of the best, most structured earnings calls in a while. So they did a good job, and they gave us clarity. I don't think all of that clarity was all positive, so they definitely took a little bit of enthusiasm away from that earnings report, but I still am overall probably net bullish on this earnings report that I got, mostly thanks to what we saw regarding margins and then the projections of deliveries, as well as, of course, a priority on getting the cost of cars down so we could increase deliveries. That's the core thing that I invest in Tesla for. That's a big deal to me. So I am happy about that. Some other things to keep in mind. 2 housekeeping things, and then we'll get into this. If you have not yet, go to househack.com/2024. Be a part of the HouseHack Roadshow. It starts today, goes for about 8 days, and then we close investments for accredited investors. Make sure you wire us, don't ACH us, and get your letter from investready.com. You could type in househack.investready.com to get your letter. And we've got an expiring coupon code on April 30th for the courses on building your wealth and stocks and psychology of money, which includes trade alerts. We also just released a bunch of new lectures, so check those out. And we have the full 37 lecture financial advice library available. If you're interested in me analyzing 37 people's situations and giving them 5 to 10 minutes of this is the next thing you should be focused on. Like, here's your situation. This is what you should do next as actual financial advice. Check that out. It's all the way at the bottom of meetkevin.com. It's called the Wealth Library. You'll see it all the way at the bottom above the disclaimer. Check that out. If you got questions, just email us at staff@meetkevin.com. So, can we make full self-driving transfers permanent? No. What's this timeline for scaling the semi-truck? Probably late 2025. They did start grading a field for the semi-truck, for the semi-truck manufacturing facility, the gigafactory for the semis. I think that's mostly clickbait. I don't really think that affects my valuation at all, but I think they mostly just grade it to make sure it doesn't, fill up with weeds and the lot looks like crap. I don't actually think they're going to build that out yet, mostly because they need to make sure they maintain capital that they have right now to efficiently deploy it on the adjustments to the manufacturing lines and artificial intelligence. As far as free cash flow, again, they say there was sort of a mismatch, so maybe they won't have negative $2.5 billion of free cash flow again. Good. Again, we didn't get clarity on other types of vehicles. Elon Musk says don't own the stock if you don't believe in us solving autonomy. And the latest layoffs were really a pruning exercise for Tesla, and that we just need to get through this hard time. Well, so again, overall, I'm very optimistic on today. I got pretty excited about today. The Cybercab, that's cool. I'm not too sure that I could really start pricing that into models for the near term. A little bummed about the 4680, though I don't know how much of a deal that makes for the stock valuation. Biggest issue might be stock comp. That could be an issue for Elon. And again, it makes sense what we've got going on with that Reuters article. And then, it's not a whole new manufacturing line. It's going to be like an adjusted line. And maybe are there going to be new models, or are they just going to be more affordable versions of cars we already have? We didn't get that clarity. Elon said stay tuned for August 8th for that clarity, which doesn't surprise me. This is Elon's only earnings call between now and the vote on his stock comp, and it is also before that August 8th event. So with that said, thank you so much for watching this summary. Really appreciate all of you. Make sure to go to househack.com/2024 and meetkevin.com to check out those programs. Now let's press the button.
Go yourself. Is that clear?
It's not the one I meant to press. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Keep in mind, I didn't catch this, but apparently Martin has just announced that he is leaving the company. Today was my final earnings call with Tesla. About a month ago, I spoke with Elon to announce that I'm going to be retiring from the world of investor relations and moving on. Wow, Martin V taking off as well. All right, thanks so much for watching. We'll see you in the next one. Goodbye.